Good morning. Looks like we're live. It's Tuesday, August 17th. Let me make sure my mic's working real quick. All right, yeah, it looks like it's plugged in. Okay. So starting a little early today. Thank you anyone who's up joining me already. Back at home. I hate streaming from not from home from my laptop. I just feel like I don't have access to the same information. I'm used to having a bigger monitor with some of my other monitors set up in other places and things like that. So, um, really excited to be back home. Just looking around the market. Let me pull up something real quick. It looks like the S&P is down right now. Finished yesterday at 446 and trading at 444 right now. So we'll have to see how that plays out. It did see I'll just pull it up right here. It saw a pretty crazy gap up, or not gap up, but a spike. Uh, just about 20 minutes ago, all the way up to 447 and then back down. It did close the day yesterday right around there, like 446.97. So, again, I mean, this happens. We've seen this happen if we look at a daily chart on the S&P. Every time it kind of rips upwards. Um, oh, I just pulled up the weekly chart. Let me get the daily on here. I mean, it's been in a constant climb up. The markets have, but you'll see it hit a new all-time high, come down, go on another climb, and then probably see a significant dip, and then just climb back up. And every time we see these kind of dips, if today ends up being one of those, potentially you'll kind of see a knee-jerk reaction and a little bit of a sell-off, early on. And then what I've seen is, things just bounce back later in the afternoon, but it does seem like today's one of those days we're looking to start the day down about $2. Could rip back right off the open, or it could continue to fall. I know, not much information, right? It could go either way. But yeah, so looking around, like I said, the S&P looks like it's down. The SPY is about $2 right now off of yesterday's close. Was looking at, GameStop and AMC. I know at times CLOV has tracked both of those. Um, both look to be kind of flat right now. AMC took a dip right, at 1 o'clock when the market opened, and it's starting to regain momentum. Not a lot of volume on GameStop at all. Looks like 6,000 in volume moving into this morning, so nothing really happening there. Clove is at about 168,000 in volume right now. Looks like, nice day yesterday. We went on a nice little run, closing at, I think we hit above 850 over here, but ended up closing right below that. What is that at? 849. And kind of the same thing right here at 1 a.m. Came down and fell, right off the the open of pre-market to 827 and now trading at 838. And it's early, but volume does seem to be picking up a little bit in comparison to what we saw in previous weeks, but it's pretty much on par for what we've been seeing in, like, let's say the last 7 days or so. DraftKings, another stock that I've just been kind of playing for a while now. I think maybe 2 or 3 weeks, and this is a long-term play for me. Looks to be down about $1 right now. If there's any other stocks you guys are watching this morning, let me know. I'll pull it up. But yeah, let me see here. Who we got in the chat already this morning? I know it's early too. Thank you guys for that are up this early. For me, it's 5:20 in the morning. Looks like Dennis D's here. What's up, Dennis? Good morning. Pete, how's it going? Trenton got up early. 6-8 Spindrift. What's up? Shrimply, Christo, what's up? And Cuckoo Bird says, "Good morning, Coach B in the Clove Nation." Right on. Appreciate you guys all coming in here um, and joining me early on. Couple things that I noticed, just looking around. It's really hard, one, finding news on Clove now. And I've talked about this a couple times since it kind of got that meme stock status. You go on the news ticker, and I'll just show you even what it looks like. And it's like, um, Wish AMC Tesla, Wish AMC Tesla, Social Buzz, Wall Street Bets, Wish Palantir AMC Clove. It's kind of hard to actually, weed out the real news, at least on the news tickers that are provided by, you know, by your trading platforms. But I believe, let me see if I can find this real quick. Yeah. So it looks like yesterday Clove did announce an interim CFO. Um, let's see here. So this is yesterday. I found this article. Clove today announced its latest internal restructuring and appointment of Mark Herbers as interim chief financial officer following the decision of prior CFO Joseph Wagner to step down. So that was one announcement that did come through yesterday in regards to Clove. So they do have an interim CFO now that Wagner's gone. But interim meaning that they're probably still, they're still on the hunt looking for something more long term. So not a lot of news there. Um, it says Mr. Herbers will effectively serve in this role while the company conducts a thorough search of a permanent CFO. Herbers brings years of experience serving in a financial director role, having served as director of Alex Partners LLP, a global consulting firm, since 2014. Additionally, served as interim CFO of American Renal Associates, a provider of outpatient dialysis services, from 2019 to 2021. Um, then the rest of it's just news that we've already kind of seen and heard about. Releasing their financial results up 140% year over year due to primarily the launch of direct contracting, the DC model that we've been talking about. And so, yeah, but that was some news that we saw yesterday. Also, looks like someone just said it in here too, but so many institutions loaded up. This might be the week. Yeah, so we saw, let me see if I can pull that up. And then we'll just take a look at some of the Fintel data at the same time. But yesterday was a big day in terms of institutional reporting, not necessarily buying, but reporting. Remember, some of this data is delayed. But on top of that, let's see here. It's been happening for a while. Like, I feel like every day we're seeing a ton of institutional buying and reporting. So anything that's red indicates that somebody closed out a position. Okay. Anything that's green indicates that someone opened a new position. It doesn't necessarily mean that it's positive though. And I don't mean this to sound negative. I just want to make sure that we're all clear on what we're looking at, right? And then when you see white, it's just an update of a position. Okay. So it might be an increase of shares or it could be a decrease of shares. But so it looks like, you know, Icarian Capital closed out their position. But then you look at like Wells Fargo, it's showing 68,000 shares, but it's actually showing a decrease in shares. So they're decreasing their position there. Parallax Volatility Advisors actually had 1.1 million calls, decreased their position by 30%, and it looks like they increased their hedge position by buying 80,000 puts. That's still a significant number of like if calls to put, so they're still long. It just looks like they're going in and they went in and hedged a little bit. So then if we look at some of these other ones. But they're, don't get me wrong. Like I said, I'm not trying to sound negative. I just want to make sure we understand what we're looking at here. Atom Investors, 208,000 shares. That's a ton. Um, Bank of America had, looks like more of a long position. I mean, just looking at it, they had more calls than puts at the time, but they decreased both. Okay. Um, Credit Suisse, 87,000 shares. Hopefully, we'll see some sort of update in terms of them. Maybe they'll put in, give us an analyst upgrade now, finally, now that they went long. And I think when we looked at this was a very old position. That this is just, they just now reported it. We got some new calls here. I'm not going to go through and read off every single one. Definitely more positive here than negative, but I just wanted to point out, like, some of these, even this one right here, Millennium Management. It's showing 1 million here and 220 puts. This is definitely a long position, but this isn't one that they just opened. You can see the change here, that they did an increase of 48% in their puts and an increase of 61% in their shares. But this isn't a brand new position. It's just like an increase. It's just an update. But anyways, definitely more buying than selling, and definitely a ton of institutional buys, like was just pointed out. I mean, some of these 630,000 calls. Um, you know, Again, this is all yesterday, 8/16. A lot of action got reported yesterday. But then even if you look at last Friday, I mean, this is all last Friday. And you can go through and here and analyze it. Here's Thursday. I mean, we've been seeing the buying week after week after week. So, kind of exciting. I mean, if anything, it's showing that, us as retail, we've kind of seen and believed in this, in this stock for a while now. At least I know I have. And to see, a lot of these institutions, or I guess I should say more, because there was already a lot of institutional ownership, but more institutions coming in and picking this stock up, and you know, basically seeing the same value and that it's undervalued the exact same way that we do, kind of reaffirms that this stock is heading in the right direction. Okay, we if we, and I'll get into the short interest and I'll get back to the chat, but I'm just gonna pull this back up because I keep, I drew this line in here a while back, but we've eight's the new floor. Okay, I mean, it really is. I know we've been trading sideways at it for quite some time, um, and that can be frustrating for sure. But I really, really feel like we've hit the bottom now, and there's nowhere but up to go. And this is, a great time to be buying. We're going to look back at this months from now and say, man, you remember when Clove was trading at $8 and we were all, I'm not worried, but a lot of people are worried that, like, man, did I make the right decision and all this kind of stuff. And it can be a little bit nerve wracking when you're, invested in a stock that's heavily manipulated like this, and with the volatility that goes along with it, where we saw swings up to $10 and then back down to 8 or below 8 at one point yesterday morning. Unfortunately, I always stream the early morning dips, and sometimes that stuff could be a little nerve wracking. But we held above 8. I know we talked about it yesterday, when we were in here on the stream, and it seemed like some people were getting a little negative, like, oh man, this is going below 8 again. But look, we popped right above. And I mean, how many times has this happened now where we've seen 8 continuously be the floor? I mean, it fell below this red line so many times over the last month, and every single time but one, it was able to. And this is that one day right there where we actually closed below 8. It was on August 4th. But every other time that we fell below, we always get that buying pressure to push us back above 8. So I'm fairly confident in this price level right here. All right, let me get back to the chat now. Sorry, guys. Kyron, what's up? Good morning. KLF, good morning, coach. Let's have a big day. Hell yeah. Jay Stead says, dude, we did so good compared to the rest of the market yesterday. It was almost like some unnatural forces have been affecting the ticker. Um, if this is real, a retailer just bought $2 million worth at 850. Are you talking like right now? This morning? I will have to look at that later. Dennis D says I added to my position yesterday. So did I. That's what I was doing on my phone. I don't know if you were on the stream, but right when 6:30 hit, I went in on my phone and grabbed a little bit more. Let's see. Michael says, "What's up? Hi, folks. Hope we will fly today. Me too." Um, a whale tucking it in their sock. Target short sellers. Upgrades will come now because they're refueled now. Okay, I know what you're saying. So basically, and we talked about this. Target short sellers, when he was on the very first, or I guess it was the second Clove Roundtable, he pointed this out, and you know, and this is exactly how the market works, right? It's like, you have these analysts who come in and bash the stock and downgrade it and try to drive it down, and once they find that it's at the bottom, now they get in at the cheapest price, right? So now that I think everyone's kind of seeing that this is the bottom. Now you're going to see these analysts come in, refuel up on the stock, and that's probably a lot of what you're seeing. Like Credit Suisse and a lot of the other ones have been purchasing up for a while now, and now that they have their position established, they're going to start releasing price targets for the other direction, and now they're going to say go long and this stock, because of the new recent earnings, is worth X amount of dollars, and we're going to start seeing some upgraded analyst price targets potentially, and that'll increase some buying pressure too from retail. People that really follow and pay attention to those price targets. So, but I guess the point was, now that the analysts got their were able to load up their position and refuel their position at a lower price. But that was something that Target short seller called out. Damn, I don't even know when that was. Back in late June, maybe, or late or early July, about a month ago. That that was gonna happen. So let's see. Leo, good morning. What's up? Someone should be reporting August recommendation rating sometime soon, right? Um, third week with no analysis for the month. Yeah, I mean, I don't think they have like specific dates when they come out and do it. It's just, the analysts that are covering this stock, they'll just put something out, and a lot of times it's after they've opened their positions that they want, or um, the people that are paying them to write the articles open their positions. That's my take, at least. Jay Stitz. Oh, I'll check it again. It was yesterday. Yesterday someone came in with a big buy. Yeah, see, I was in Walnut Creek, or no, Monterey yesterday, and I set an alert on my phone. I think you might be able to see it on the screen. Let's see. It's up here. It's at $10. So I just set an alert on my phone, like, hey, if the stock passes 10, to let me know. And I just stopped looking at the ticker and stuff after I signed off the stream yesterday morning. So I mean, I literally did not pay attention to anything. But it did look like I said, I was looking at just the overall market kind of dipped early and then went on this nice run up to finish the day. I believe that's an all-time high too. Yeah. So, but a lot of times when you see that, what ends up happening, and I know I've talked about this a lot, starting yesterday morning, or I guess in pre-market on Friday, we started to see this decline in the overall market, and then again in pre-market yesterday. And so what happens is all these stocks start selling off, and then the market as a whole starts rebounding, and not every stock rebounds with it. So that's why, like, if you have, a lot of other stuff in your portfolio was showing up red yesterday, that sector that you're invested in may not have rebounded the same as some of the other sectors. And a lot of times that's what it is too. It's just cyclical. Like, it'll just, they'll rotate. So you'll see a sell off in something, and then you'll see a ton of buying in another one. Um, let's see here. Oh, Tarheel Blue's in the house. Good morning. What's up? Get us some green. I hope so, man. I really do. I'm ready for it. Which actually, you know what? That's kind of a good transition too. I just we'll start talking options and looking at some of the other stuff. Um, let's see here. So I'm gonna pull up short interest on Fintel first, just so we could take a look at that. This is the same information as Interactive Brokers, from what my understanding. It seems like this stuff aligns almost exactly with the iBorrow desk. Um, let's see. Yeah, like for instance, so last night, um, the last reported number was 850,000, and if we pull up iBorrow desk, 850,000. So I think you're getting the same information there in terms of short interest, the short shares availability. Um, let's see if it says here. Yeah, it's just saying that it's a small sample, and we know that it's really, I think only coming from one lender. But either way, so we see that borrow fee rates up a little bit. Up to 1.4 as of yesterday. That hasn't been updated yet. If we look at this is the short volume that's been coming in, and basically we're looking at, it's pretty much been on par for a while now, above 40% of short volume, meaning the total volume coming in, every day. 40%, over 40% of it has been, short selling happening. And, there was some days where we dipped down in the 30s, but this has been pretty consistent for a while now. Failure to deliver data looks like has this been updated? Yeah, this is new. I haven't seen this yet. So this just came out. Maybe it must have got reported yesterday, but it looks like, because this is where we ended last time, was on July 15th, and with 254,000 FTD, and looks like it kind of slowly crept up, got up to about 1.1 million near the end of July, and a little bit of cover in there into July 30th. So, nothing huge, nothing like we saw back on July 8th, 9th, and 12th with these huge numbers here, which were absolutely insane. Like when you compare them to even some of the other big name, squeeze plays like GameStop and AMC. This right here accounted for over like 15% of the float. And to my knowledge, I don't think any other stock has had that many FTD reported at one time. So, and then they just vanished, without the stock price increasing. So, yeah. Let's see here. I think that's it for Fintel. That's what I was going to show you there. If we pull up Ortex right now, it does look like we came into today with 52 million shares on loan. It looks like right now we're seeing 3 million have been borrowed already today, which puts us at about 55 million. And the biggest that we've seen, dating back to like when, June, when we saw a cost to borrow going up to like 200 and 300%. I think the highest we saw was in between like 59 and 61, somewhere in there. It was floating around every day. So right now it looks like we're at 55. When you add in the amount borrowed today plus what was already on loan, short interest is going to increase another 6%. which would put the estimated short interest for what's being reported by Ortex at about 34 as of right now. Looks like this is saying 29. That seems off because normally you would take yesterday's total and add it with the change today to get. Oh, here we go. Here we go. 33. Yeah. All right. Maybe it's just me. I'm just tired. All right. Anyways, if we look at actually, let me get back to the chat real quick and I'll check it out. SMJ, what's up? I saw your question and I'm just started this right now because you had sent me a question on Reddit. I'll just answer it here if that's easier. Vin says, Coach, I've been watching you for a while now and I've been enjoying your content. I was wondering if you could speak about a good exit strategy when the short squeeze occurs. Yes, I will star that and we will cover that coming up here shortly. I just want to catch up real quick. Uh, Crystal wants Tarheel Blue to start reporting the days to cover in the chat. So THB, if you're out there, I'd appreciate it. Franklin, what's up? Good morning. Put me in. I'm a green shirted freshman. Nice. Pat says top of the morning, coach. Let's see. Stock Hunters in the house. Steve the Baker says, stupid question. Why does short interest increasing bring the price down? So when short interest increases, that basically means that more shares are being borrowed, right? So if we pull this over and look at it, it looks like 3 more million shares got borrowed today. So that means they're borrowing it. That's increasing the short interest, and now short sellers are selling those shares into the market to drive the price down. Hope that answers the question. I just saw the notification that I got a super chat or a super sticker. What is this? Tarheel Blue, what's up, man? Thank you. I appreciate it. And I can't get it to appear up here on the screen, but it says hippo character repeatedly points to the streamer while chanting "Get good." Right on, though, man. I appreciate it. Thank you. For real. All right. Let's see. Let me get back in here. Yeah, utilization's high right now, and usually, I want to say when we had our little gamma squeeze last time, utilization was in the 99% range. So the setup's there. Michael's in the house. Good morning, Michael. What's up? Jason. Good morning. Gruntman says coffee, clove, and coach. The 3 C's you need to start your day. I like that. I might steal that from you. We were talking the other day, like, about doing maybe coming up with some designs or doing something to, like maybe even like making a coffee mug or something like that. But I like that. The 3 C's, coffee, clove, and coach. If you're younger, feel free to substitute cereal for coffee. Low work, good morning. It says bought more at 819 yesterday. You guys are always getting better prices than me. I swear, I don't know I don't remember what I got in at yesterday, but I don't think it was 819. All right, so I started a couple of those questions. Actually, Andy Smith's in the house. What's up, Andy? SMJ had asked a question on Reddit, and I'm just gonna look at it real quick. Basically, who has loaded the option chain for this Friday? If it is a hedge fund, that means the market maker has to buy all these shares and give them to the hedge fund. In that way, they can cover some. Do we know how many shares the option chain will accumulate? Could this be enough to cover them all? So basically, to get to your question, so because I understand, because I've wondered the same thing before. Wow, Dennis says he bought it $7.97, got the bottom perfectly. Um, so essentially, the question is this: could a hedge fund or someone who's short this stock um, go into the option chain, buy options, force this gamma squeeze, make some money on the way up, exercise the calls, and essentially get out of their short position? Yeah, absolutely. Um, that could happen. I mean, what's that going to do? It's going to propel buying upwards and shoot this stock up to 43. At which point, they could likely exercise and get out. All that's going to do is transfer liability, though, right? I mean, the market maker or whoever wrote the options whoever's on the other side of that options contract, and it could be a different hedge fund or institution on the other side of that contract too. But whoever wrote the contract is gonna have to purchase those shares if they get exercised. Otherwise, it'll end up in a failure to deliver, and it just creates a bigger mess. Um, if you look at the options chain in general, there's way more. If you go through and tally everything up, there's way more open interest in the option chain than actual shares that exist. And it's always like that. I mean, even if you go through Disney's option chain, you'll see the same exact thing. Not the type of magnitude that we see in CLOV, but there is always more open interest for the most part in an options chain than shares that are in existence. Now, when it gets completely overloaded the way we have it right now and lopsided, where there's way more calls than puts, that's where you start seeing that gamma squeeze potential, right? Because now, typically market makers want just as many puts as calls, and that way it outweighs itself, and they're just writing the contracts. Someone's gonna lose, someone's gonna win. It's a wash. They make money in the middle. That's how it's supposed to work. But when you get these setups like they are right now, it creates kind of a weird potential for if the stock can move higher. Now the hedging is going to make the stock drive up in price. Um, but yeah, no, I mean that's a great observation that you have there, SMJ, and that absolutely could happen if, let's just say that that was the case, and you had short sellers, reversing position, buying calls, driving the price up, and riding it up, and exercising. Like I said, that's just going to transfer the liability onto whoever wrote those calls because now they're not going to be able to go get those shares because they don't exist. There's not enough shares out there. So what ends up happening? It becomes a naked short position. They're giving shares that they don't own, and now they have to end up coming up with those shares, and it puts them in a hole where now they got to go find those shares at some point in the open market, right? I mean that brings up another point that I was gonna probably do a chalk talk thing about, because it just applies to the entire market. But can shorts cover on the dark pool? Absolutely, they can. Um, you could buy shares wherever you want and cover, but there has to be somebody willing to sell on the other end. There has to be another side of the sale. So if I'm short the stock, I can get those shares through the option chain like we talked about, or I can go in the dark pool and buy them if someone's willing to sell them to me. If there's not a seller on the dark pool, sometimes what could happen is a market maker can just choose to take on that sale to create liquidity and sell me shares that don't exist. That takes care of me. I got shares now. I can go deliver those shares, do whatever I have to do. Now on the other end, it's the market maker who just took on that liability, and now they need to, basically um, deliver shares at some point to the clearinghouse. Otherwise, they come up with the FTD, and it just keeps perpetuating down the road. I know it doesn't make common sense, but that's how it happens. Damn, Kenneth got in at 798 too. Everyone got in cheaper than me yesterday. Jadenia, what's up? Good morning. Um, Stock Hunter says today's going to be a good day. I really hope you're correct. Low Work says smash that like for Coach. Right on. I appreciate the support. Um, and Kenneth says, for any smooth brains like me, you have to X out of the chat, then hit like and sub for alerts. Then re-enter the live chat. Yeah, right on, man. Because I'm the same way. I'm not good on I had to ask the same exact question. I was watching Tarheel Blue show one day, and I'm like, "Hey, how do I like this from a cell phone?" Uh, and then they explained it to me, and I went in and did it. I always give Tar Heel Blue shit when I'm in his chat, and I said something like, when I'm on my cell phone, I just don't like his videos, but I always do. I'll go in and do exactly that. X out the chat, and go in, like it. Same thing if you want to subscribe or do any of that stuff, and then I'll go back in and put the chat back on. But right on, Kenneth, for giving us that breakdown. Mike and DC, what's up? Good morning. Um, Steve says I've set a buy for $7.95 today. Wish me luck. Yeah, we might see that dip. I mean, I'll say this much though: if we're gonna get a gamma squeeze, and I'll go over the option chain right after this, but if we're gonna get a gamma squeeze, we need to stop seeing these dips. We really need to start seeing this price moving the other direction. Otherwise, it's just gonna be an opportunity lost. It's gonna. We really need to. I talked about this last week. In order to see it, we kind of need to see, maybe the price close today, another 10% day, something like that, where we get that momentum and then see it climb into after hours and then see it climb again in pre-market. And we really want to be ahead of the options chain when we open up. We want to have a bunch of calls in the money heading into Friday. Um, and I mean, like the last squeeze happened on a Tuesday. A lot of them that I've seen in the past usually take place on Wednesdays. But the closer we get to Friday with all these calls out of the money like they are right now, the least likely it's going to be. So, great transition to kind of get into the options chain. Let's take a look at it. So, pull this over. This is TRADYTICS is a little bit off on this. Their max pain numbers are way off. One thing I'll get to first actually is this morning, MaximumPain.com. Max pain now is at 9. Okay, so I think it was 850 when we looked yesterday, I believe. If I looked yesterday. Um, Yesterday I was on my laptop in a hotel lobby, so and I was had a long night. We drank a bottle of wine at dinner, and I was pretty tired yesterday morning too. So, but it does look like Max Pain is at $9 for this week, which means market makers would want to keep us, probably right below 9, but sometimes above 850 is the way that works. Like in between those two strike prices. Um, for some reason, TRADYTICS is saying 20. That doesn't make sense. But if we look at the overall open interest, and this goes for all of the entire option chain, we can actually pull it out by just 822. But just looking at the entire chain first, actually, let's start with 820. So this is what we're looking at that's expiring this week at the 850 strike. Not a ton of difference, but at the $9 strike, 25,000 calls to 5,000 puts. That's 2 million shares that would have to be hedged. Um, you know, the $10, 32,000 to 10,000, so that's another 2 million shares. 17,000 to 2,000, that's 1.5 million, and it continues on. You can kind of see in the graph, 15,000 is a big one. 41,000 calls to 5,000 puts. That's a ton of shares. And this is how the gamma squeeze works. So as you pass certain strike prices, the algorithms start hedging those shares because they know that we're getting close to options expiration, and the closer we get to expiration, that if people start exercising, they need to come up with these shares. And so to hedge to hedge their risk, they'll buy those shares up before we cross that mark, right? So as we get closer and closer to the $9 mark, they're going to want to accumulate enough shares, or maybe they already have a certain amount of shares accumulated at $8. So, once we get to 950, they can go in and hedge the rest of them and get their cost average below 9. That way, if you exercise at 9, they're still making money. That's where they're coming from with the algorithms and the hedging. So it doesn't really matter to them as long as they can get the shares as we continue to cross these strike prices. But that buying that they're doing continues to drive it up. And then we start crossing these big numbers like 15 and 20, and that's enough to propel us all the way through the chain. So that's what we're looking at. But anyways, So this is just August chain. Now, if we pull up the entire chain, because that actually, is incorporated in the, let me see if I can refresh this and get it back. Yeah, I think we have the whole thing up now. So now we can see, how much more magnified it is when we're looking at the entire chain. There's almost 93,000 calls at the $15 strike compared to 10,000 puts. That's 8 million in shares that would potentially need to be hedged if we were to get all the way up here to 20. That's, that's a lot, especially considering the float size of CLOV. So the potential's there, right? We did see a lot of puts coming in yesterday. And it looks like the $15 strike, but also, some calls came in at 550, 12, 10, 8, 10. So a lot of call buying too, but quite a bit of puts here. Looks like for September at $15, and then also for August 20th at $15. One unusual contract was at the $8. Someone bought 1,000 puts, and that absolutely was a buy. So sometimes when you see these orders, and I've said this with calls too, but this could be people that sold their puts yesterday. Like they already had open put contracts and they came in and sold them. This doesn't necessarily mean that there's new positions getting opened, because the volume that came in on this order was only 78 put contracts and there was already 5,800 open. So there's no way of us knowing if someone's selling a contract they already had open, or opening a new, like closing a position or opening a position. But when you see these unusual ones, you absolutely know that someone opened a position. So someone opened a position here with 1,000 puts, because the open interest at the time was only 539. So that tells us that it's a new position. Same thing down here. We see 860 $10 calls for September got open, because the open interest at the time was only 637. So that's the other thing that I think we'll see too, is we've seen this happen in June and in previous months, even in May and April. A lot of these big players that are waiting on CLOV to finally have its explosion, the same way we are, is they'll just continue to load the option chain. So as we're getting closer and closer to this expiration date of August 20th, there's already a ton of open interest in November. And let's see, just pull up the big strikes. The monthly is September 17th. You could see that the 9, the 10, and the 12 are already kind of building up. Okay. And then the other big date that I know was in there was the November. I mean, you see here, huge open interest, like calls outweighing puts at 9, 10, 11, 12, 15 is another big number. So you'll start to see the option chain continue to be loaded up. December's already got a ton at 15. Um, as we continue to move through, and it seems like it's always going to be loaded up. We're always going to have that gamma squeeze potential, if we don't hit it this week. Like I said, I think in order to hit it this week, we need in order to hit it this week, we really need to see the stock moving in the other direction. We need to get in the money. We need to get like the $9 strike in the money today, or at least in pre-market tomorrow, in order to like get us within striking distance. All right, let me I go on these rants and then I get way behind. SRT's here. I saw that already. Lisa, what's up? Good morning. Um, Levi, good morning. Let's see. Carl says, could it be that market makers are benefiting from the puts instead of staying neutral? Could this be a way to recoup FTDs? I need to know if I could take my tinfoil hat off. Are they benefiting from the puts? So really, from a market maker's perspective, right? Like they're selling. Now, some market makers also own hedge funds too, right? So like Citadel, for instance, they're a market maker. They also have a hedge fund who's short this stock, and so the hedge fund side of them could be buying puts and benefiting on the way down. But really, you wouldn't be benefiting off puts right now either, because um, how do I put it? You're kind of like, if you buy puts, you are looking for the stock to go down in price, and we haven't been going down in price. I mean, we've been sitting here in this $8 range for a while now. I mean, what are you making, a couple pennies at that point? So I mean, the puts wouldn't really, anyone who's shorting the stock, they want it to fall lower, and we've kind of hit that bottom now. Like, they could have made money off puts a while back. Um, you know, I mean, through selling puts, market makers could be accumulating shares in that way, for a cheaper rate. Absolutely. So, which is a bull. Selling puts is a bullish move. Like, so if I sold you the $8 put right now, and it's just giving them a discount on the shares, but we'd have to close below 8 for them to have to, be forced to purchase it and get assigned, and then they're getting assigned cheaper. So that, I mean, that could be a way that they're accumulating shares, but really market makers, I mean, they have the ability to create phantom shares to level out their business on the day. Then they just want to accumulate it cheaper, right? So from a market maker's perspective, if you wanted to buy uh, 10,000 shares from me right now, and I route it into the dark pool so that it doesn't affect the price going up, I give you 10,000 shares that I don't own. Now I'm naked short the stock. Now I just need to go in and accumulate, and I sold them to you for $8.33. Now I just need to go in and accumulate as many shares as I can to get those 10,000 shares back. And really, all I care about is making sure I get those shares back below 833. So just now we saw the price drop, fall to 832. Maybe I accumulate, a couple hundred here and there. Later on, maybe the price goes down to 828. I accumulate some more until I get to my 10,000 to deliver to the clearinghouse later, because I already sold you the shares for 833. So now I just want to buy them cheaper in the market. So that's my incentive to keep the price down, along with the incentive of preventing a gamma squeeze. I hope that makes sense. Stars, what's up? Good morning. Um, if you haven't watched the video, Tarheel Blue and Ego mentioned yesterday, from Where Are the Shares? Do it after Coach's stream. Yeah, I saw that video a while back. I think someone put that up in regards to GameStop. But like I've been saying for a long time, there's a ton of great videos out there and content out there, um, on the Super Stonks subreddit. I mean, they have it all, categorized and ready to go, where you can go in and watch and learn about a lot of this stuff. And it all applies, like that's why I said, like, Super Stonk is a great resource. You just got to look through all the other, the meme posts and everything else. Just like being in the closed subreddit, it's the same thing. But there's a ton of great DD in there that applies to market manipulation. I mean, I've learned a lot reading through that subreddit, and I believe that's where that video came from, if it's the same one. And then Lisa just dropped the link in the chat right on. Ecom says something stinking that floated some BS. Already left messages with New York SEC, FactSet, and Green Oaks Capital. Yeah, I've actually, to my knowledge, I mean, I don't know what other stock. I think CLOV is confusing in its own right, because there's so many Class B shares, and like, Green Oaks converted some, this and that, all this stuff. But it just seems crazy that when you look across the board, everybody's reporting a different float size. And then that allows them to skew data, right? Because if the float is, if you're telling me there's 190 million in the float and someone else says there's 150, well, how do you figure out what percentage of the float is short? How do you report short interest? And just by adding like 20 million, 30 million, a data error on the float side, you can vastly affect, all the numbers that are just getting output based on real data. Um, yeah, I don't know, but I mean, at the end of the day, I feel like, yeah, I mean, we do want to see accurate information, and like you emailing, and Al Trades has been really hammering hard on people too, trying to get the right data out there. I guess from my perspective, for me, I just I know this stock is worth more than $8.30. So I'll just continue to accumulate it. And I look at it as opportunity. Um, but you know, we do need accurate data. We deserve accurate data, and all the getting that accurate data out there is just going to make more people kind of open up and see the short sweet side of what we're looking at. Um, but from like a just investment standpoint, and I'm usually not an investor. I'm usually a swing trader, but I'm willing to put my money in and invest in this stock right now. And if the squeeze never happens, I know that the stock's worth way more than that too. So, but yeah, it's frustrating. It's frustrating that we're not getting accurate data. That so many different reporting companies are putting out a different float size. Um, it's insane. Nathan, what's up? Good morning. Rabbit Yotes, good morning. Jason, what's up? Let's see. David Copperpot, good morning. Crypto Cello, nice to see you back in here. Big C says, good morning, coach. I drove a Zamboni. You're absolutely right. They're taking advantage during periods of high IV and selling calls, then putting out news articles thrashing the company prospects. I mean, that's how it works. I mean, and that's kind of like the rule of thumb. Um, Once you kind of get into like options a little bit more and you start to learn all the different intricacies and the ways you can make money off it. When IV is high, you want to be buying shares and selling calls. That's when you're going to profit the most. When IV is low, that's when you want to be buying calls. Okay, you want to be a call buyer when IV's low. You want to be a call seller and a share buyer when IV is high. That's always been my rule of thumb. Something that I've always kind of and it works. I haven't sold any calls on Clove, and I talked about that a little bit yesterday, just because I don't want to get my shares pulled away from me and get exercised, because I believe this company can go much higher. But absolutely, I think that's exactly what they're doing. When they see high IV through the roof, they're gonna try to make us trade sideways and just rake in that premium. Then when IV starts to drop, that's when you're gonna see and that's basically exactly what I've seen with GameStop over the last 6 7, almost said years, over the last 6 7 months. Is whenever IV just gets extremely low, that's when GameStop goes on its next big run. And that's when you'll start seeing, because low IV allows you to get options contracts for cheaper, and it allows people to leverage their money more. And so you'll see big players come in and just start slamming down on calls, and that requires hedging, and that causes the price to go up. Although GameStop has been acting funny lately. I mean, volume has just been non-existent, and I want to say somewhere around this point right here is when IV got like ridiculously low, like lower than it's ever been, and it's continued to trade sideways and downwards. So, um, yeah, so much for that theory. Although it has been going green for a while now. It's been on a nice little run since August 5th, but insanely low volume. Speaking of volume, Clove right now we're at 335. What time are we at right now? 612. Not bad. All right. Oh, I'm still on the daily chart here. Yeah, just as a comparison, because I know I was just talking about it. So GameStop's volume on the day right now, 9,600, 9,600. So, I mean, volume has been absolutely drying up over there. Um, but we've talked about this too. Dry volume, makes it to a point where your bid ask spreads are so wide that when real buying does come in, that's when you start seeing some violent upwards movement. Clove just kind of touched into oversold territory on the RSI. We just dipped below 30 on the 5 minute. Um, should see a bounce back here, I would imagine. Big Daddy Roro's in the house. Rick says, I'm so sick of the stock market. It's so rigged to the 1%. Makes me want to just quit altogether. Yeah. I was talking to a friend of mine the other day about this because they were saying, like, when all this is said and done, I'm just going to quit investing in the U.S. stock market. Um, and while I think that's an interesting take, and to each their own. I mean, if you make enough money off Clove or one of these other stocks and you just want to walk away, because you're content with the money you've made, that's absolutely, I think, a fine play. But for me, um, as a trader, and again, like GameStop and Clove, this has been a really unique year, I think, for a lot of people, but it's really changed the way that I've traded too, right? I mean, I've never been like a buy and hold type. I've always been a swing trade type, follow momentum. A stock's doing good, you stay in it. If it goes against you, you have a stop loss set, whether it be through your broker or a manual, like in your head stop loss, and you get out. I mean, there's times where I wouldn't even hold money in the market overnight. I would I would always clear out my position before the night ended, and I just reopen it the next day. And I think if you go back to that or start to get into that, you'll be fine, because yeah, even if the market's manipulated, for me, the way I've always played it is I don't give a shit if a stock's manipulated or what's going on. You want to just be on the ride. So if you see that a stock is being manipulated downwards, buy puts. if you see that the momentum is picking up in the stock, buy calls, and you just ride the waves and make money. This has just been a weird experience, like getting into a stock like Clove or like GameStop, where you see that there's this potential in it. It's being manipulated and just holding through it. But I truly believe that we can't go wrong in this scenario. I mean, we have a stock that's worth 3 times what it's trading at right now. Right now. And then all the other potential that goes along with it too, like the gamma squeeze and the short squeeze and everything else. Um, Let's see. I think in mine says, "Good morning, Coach." Amy Max. Yesterday there were debate going on. FTDs are not going to reflect stock price. What do you think about that? I didn't see the actual debate, but FTDs are not going to reflect stock price. I don't know what you mean by that. Was that the? I think there was a tweet by Eor from S3 that was saying, or maybe he's from Ortex. I don't know, where he was saying that failure to delivers and naked shorting getting covered doesn't drive the stock price up. I think maybe that could, let me know if that's what you're talking about. But if that's what it is, I think he's absolutely wrong in that, because that stock needs to be acquired in the open market at some point and returned to the clearinghouse. At the end of the day, um, if there's all these naked shares, I don't like calling them synthetics. I know a lot of people say synthetic shares. I don't like that term, because a synthetic share, to me, you can create a synthetic share right now in the options chain. I can go in there and make a synthetic long or a synthetic short, and that's totally legal. I could do it. You could do it. Um, so, but like these fake shares, let's just call them fake shares, right? That are floating around, that are get created when people naked short a stock, and they create failure to deliver. Well, yeah, I mean, it has to be bought back. Real shares at some point need to be bought back and delivered to the clearinghouse. So at some point, there is going to be some buying pressure that comes in. Now, it could be that it all happens off exchange on a dark pool or something like that, but there has to be a seller willing to do it. Otherwise, the market maker needs to accumulate those shares in the open market. It has to happen at some point. I don't know if that's what you were getting at, though. Lisa says, price is what you pay, value is what you get. Warren Buffett, in my opinion, the value of Clove has huge long-term potential in addition to squeeze potential. Absolutely. How is no one seeing that we've been trading sideways forever? Yeah, we have been trading sideways forever. Absolutely. Man, I'm seeing that. And that's why I'm saying the floor is 8. We've been trading at this $8 floor for a while now. which means there's only no anywhere but up to go from here. That's just my opinion, but that's the way I see it. We've been trading sideways at 8 for so long that this is the bottom. Co-creators in the house. What's up, co-creator? And Rick James, what's up? Anyone looking at Nano Vibronics? I don't know anything about that one, so I'm definitely not looking at it. Joseph Scott, what's up? Thank you for the super sticker. I appreciate it. What's it say on there? Money, mouth, face. Okay, I know what emoji you're talking about. For some reason, these emojis don't come up on this software I'm using, but I appreciate the super sticker for real. Thank you, man. Really, it means a lot. Let's see here. Sammy says, "Do you still think $8 is the floor?" Absolutely. Pat says, "Not sure how valuable indicators are with CLOV, but target short sellers had a video showing MFI and CMF all on the incline during this sideways trading." I don't know what MFI and CMF are. Might be because it's too early in the morning. Matt C says, "Talk to my dad about this. 40 plus years in stocks, FTDs do not necessarily transfer to stock price change. Told him about the 19 million FTDs he had, or we had, and he said it's a lot, but may not change the stock price." So, yeah, I mean, it doesn't necessarily. So, I guess exactly what I'm saying, like, let's just, in theory, okay, and all these FTD failure to delivers, it's not one person. There could be thousands of people, out there that make up for this. It could be hundreds of people. It could be 10 people. It could be one person. But let's just say all 19 million shares are my failure to deliver. I'm the market maker, or I'm a hedge fund. I owe 19 million shares. I owe these shares. Okay. And like I said, like I can, you know, maybe talk. I'm just going to be completely honest here. Let's say Green Oaks owns 96 million shares or whatever they own. If they want to part with those shares and sell them to me, I can go get them from them on the dark pool, deliver those 19 million shares, and yeah, that won't affect the stock price at all. That's absolutely possible. Um, but if there's nobody willing to sell, if there's no institutions that are going to sell me those type of shares on the dark pool, then I eventually have to go into the open market and buy. Otherwise, what happens is maybe there is a market maker that'll open up a naked short position to me on the dark pool, and let's say sell them to me again for $8.20, and now I get all those shares from him, and I can go deliver them to the clearinghouse. And now I cleared my FTD, but the market maker just created an FTD because at some point real shares need to be delivered. I guess that's what I'm getting at. And so while they could be, screwing around in the dark pool to obtain these shares, a lot of them are just phantom shares unless the institutions that hold the real shares are willing to sell them. So if no one's willing to sell on the dark pool, then they're going to have to eventually get them in the open market. Scotty's in the house. What's up, Scotty? What's going on? Okay, here's the other half of Matt. It says FTDs count both ways towards buying a share that was never allocated or selling a share that was never allocated. Yeah. Okay. And so I saw somebody point that out the other day too on Twitter, because I did see kind of the debate that was going on Twitter a little bit. I caught a little bit of it. And, yes, a failure to deliver could be a long position too. But when you have a stock that's being shorted, the failure to delivers are absolutely shorts, in my opinion. And I could be wrong, but in my opinion, right? So it's all about liquidity. So if everybody's shorting the shit out of this stock and selling short shares into the market, my assumption is that these failure to delivers are shares that need to be delivered from short positions, because that's the momentum in the momentum of the people that are trying to drive the stock price down. Now, if it was the other way and all of a sudden we had a stock where everybody was trying to buy into this stock and drive the price up, and people are buying. At the end of the day, that means what? Someone's selling um, shares that they say they own, and now they have to go deliver those shares that they sold. I guess. I mean, to me, that's still saying that these shares don't exist. That would still be a naked short seller, at least in my off the top of my head. Um, so, because at the end of the day, and I know I'm just kind of rambling now. What happens with the way these failure to delivers are created is, so there's a buyer on one end and a seller on the other end, and the clearinghouse needs to get the shares from the seller and deliver them to the buyer. So whenever there's a failure to deliver, that means that the seller over here didn't have the shares. Okay, whether they're long or short doesn't matter. Um, they sold shares, so it could be someone who's long the stock that decides to sell their shares. It could be someone that's shorting the stock that decides to sell their shares. But at the end of the day, whoever sold the shares needs to deliver them to the clearinghouse. So those are shares that they didn't have that they're eventually going to have to accumulate. I hope that makes sense. Um, Scotty says can't hang too long. I'm yelling at these idiots here in the Bronx. Get to work, Scotty. Get to work. Um, let's see. Let me catch up. Uh, let's see. The reporting CLOV float is 199 million on Bloomberg now. Lots of warrant redemption must have hit yesterday. That's true too. We do have I think the last day, and I could be wrong, but the last day for warrants like just passed. Um, was it yesterday, 8/16, or was it 8/13? I know it was one of those days right in there, either Friday or Monday, or even over the weekend, but it was somewhere in there. So those warrants could be adding to the float, and that's why we talked about this, and I know Tarheel and Pablo went into a lot of depth on this way back when the whole warrant redemption thing was announced. But, the whole thing about us trading as low as we were was actually good for long-term shareholders in Clove, because if we would have been trading at, let's say, $20 last week, we would have saw a lot more shares show up into the market, into the open market, because a lot of these warrants would have been redeemed, and there would have been way more shares created by them. But because we were trading as low as we were, I think the difference might have been like a 4-to-1 ratio or a 3-to-1 ratio, in which warrants became shares, so way less dilution in the stock. Pat says, from what I understand, CMF is like a pressure valve and MFI is like water pressure. Both showing an increase means buying pressure has been increasing despite the price being stagnant. Yeah, I mean, we've been seeing that anyways, right? But in talking about that, like, what's happening is, in my opinion, and we're seeing it. I mean, if we pull up, let's look. I know I have this on here before. We're almost near market open now, but every single day, what are we seeing? Dark pool volume, 46% yesterday, 53%, 50%. I'm looking at this column here. This is day by day. 35%, 49, 47, 46. More than 40% of the volume has been going through the dark pool. And if you're routing buy volume into the dark pool, that means all that buying pressure is getting thrown to the wayside, and then you're only putting the short pressure in. And if we look at the short pressure we've been seeing, I know we went over it earlier in here, but more than 40% of the total volume has been short selling. So it's just pure market manipulation. Route the buys through the dark pool so they don't affect the price. Route the sells and the shorts through the open market so it does affect the price. And then you're getting lopsided. You're getting this lopsidedness that's really just making the stock stay stagnant, like you're saying. But at some point, these guys have to cover. And I keep saying this, and I know it's frustrating for some, not for everyone, but for some that don't have the patience. But it's like, this company's organic growth is going to propel the stock upwards. and it's gonna force short sellers out. We're seeing good news after good news after good news. We just saw 140% year over year revenue increase. We just saw lives under management, double in one quarter, and the DCE model made them more profitable. I shouldn't say profitable, but it brought in more revenue, which will eventually equate to profitability. Um, you know, and it's coming, right? I mean, we're seeing more institutional buying. It's gonna continue to drive the put more pressure, almost like we just said, like Pat said, like imagine like this pipe and there's all this pressure building up in it and building up in it and building up in it. At some point it's gonna bust. And all they're doing is putting more pressure into the pipe as they're continuing to manipulate the stock. As soon as more these analysts start coming out with higher price targets right now, what's gonna happen? If all of a sudden, and I have no idea what these analyst price targets are going to be, but let's say, where we've been seeing these price targets at $9 and $10, which is laughable. If all of a sudden they assign a real price tag to this of like $24 or something, um, you're going to see a ton of buying all of a sudden flood the market. Ooh, that bell was loud. That probably woke up my kids. We're going to see a ton of buying just come in and flood the markets. And that's going to force shorts out. So we just need patience. Ectav says, at what point does the price of a stock start going from cents to dollars? It really depends on the volume, right? The liquidity, like over here on level 2. Right now, we're seeing like a 2-cent spread. But we could end up seeing a 20-cent spread and a 30% spread, depending on volume and how many buyers there are in comparison to how many sellers. But I would say usually once you get into triple digits. I mean, that's not to say that it can't happen before then, but when you get into triple digits, typically that's when you can start seeing it move like that. Um, you know, it's really just relative to the amount of volume that's running into the stock. I mean, you could look at a triple digit stock right now, and it still might just have a 1 penny spread. But as volume decreases a little bit, or either the buy or sell side starts to wear out, you'll start to see more of a gap in that bid ask spread. On Reddit, they were saying if we pass $10 by Friday, we might get a squeeze. Nah, I don't think so. I think there's a misconception um, that in order for this gamma squeeze stuff to take place, that you want to see us in the week in the money. Now, don't get me wrong, that'll help the stock's organic growth. So if and I guess what I mean by that is, like, if we were to finish above 10 this week, yeah, I mean, that would be great. Hopefully, people would exercise their call options. That might provide a little bit of a bump next week. Well, that'll continue like an organic stair stepping type fashion. So it would still be great for the stock. But closing above 10 isn't going to kick off any sort of squeeze, in my opinion. What we'd want to see, if we want to see a gamma squeeze this week, which would be like options induced, we want to see, and here I'll just bring up the option chain right now while we're watching this big green candle on CLOV. We want to see, this is the August 20th chain. We want to get above like 9 and 10, let's say by tomorrow or by Thursday morning, because then that's going to create the upward momentum that'll get us to 18. We want to cross all these numbers this week. And if it's the end of the day on Friday, that's not going to happen. Um, we're going to end up seeing it kind of like fizzle out, because what happens, yeah, all of these, if let's just say that we're talking the end of the day on Friday and all of these go in the money, yeah, that's a lot that need to be hedged still when you look at the delta, but there's still a lot that can be unhedged too, and that also comes into play with it. So don't get me wrong, it will provide a boost, but I don't think that just closing there is going to do anything. We want to get past those numbers early in the week. I mean, it could happen Friday morning. Um, If it's Friday morning and we blow past 10, like early in the morning, even in pre market, absolutely. But if it's just like an end of the day type thing, like, right near the close, we close above 10, and that's like, the battle of 10:01 or something like that, that's not going to do shit for like a squeeze. That's just going to, potentially get more people to exercise their options and maybe sustain that movement so that can become like a new floor. That's my take, at least. I mean, I'm not an expert by any means either, but that's the way that I understand things. Matt says my dad is a career bear, so hearing him say the best defense CLOV bears have is that hedge funds are aware of playing the short squeeze, see the transactions coming in, but with enough buy-ins. Um, they lose control of the short squeeze play, and shares become sold past the float and prompts things like margin calls, rapid covering, market maker buyback deals, etc. Yeah, I mean, and that's something that I think he's absolutely right. Like in terms of, you know, I think GameStop was kind of like maybe the first one where, and I don't even know if it was the first one. Maybe the first one that had the national attention and so much retail attention, but it did. It caught a lot of the market makers off guard. That wasn't by any means the first short squeeze though. I mean, there's short squeezes in the market every single day. Every day there's short squeezes in the market. Um, but that was one of the big ones that kind of caught them off guard, back in January, and where they lost control. But they do lose control every day. It's just a matter of, which stock it's going to be. And I like my odds with Clove just because of the entry point and where we're at. But I guess, yeah, I mean, and a lot of these guys, like in their name, and I'll continue to say this, is hedge. The definition of hedging is basically like taking both sides to, like lower the risk. That's not the actual definition, but that's that's basically what it means, right? Is you're going to take both sides of a play to eliminate some of your risk, and that's essentially what they're always going to do. I mean, even hedge funds that are long Clove right now, or any of these stocks, own puts in it. That way, if it goes the opposite direction, they could profit on the way down, or at least minimize the loss that they're incurring on their shares. So at some point, when they feel like they're losing control, I think they're absolutely just going to buy calls and ride them up the other way. Um, David Copperpot says last day to redeem warrants is August 23rd. Okay, okay. Um, Didn't they have to cover on ATOS that didn't work well for us? No. So like with ATOS, it was the same type of scenario. It was the same type of situation. Like it was a gamma squeeze setup, but we didn't get it. I mean, and that could be exactly what happens this week. Like, for instance, if they could pin us below 850 all week, or below 9, all those calls are going to expire worthless. I mean, you know, that's a lot of calls here that people have collected premium on already, and they don't want to have to, get them exercise and give away shares. So, yeah, I mean, they're gonna try to pin this down, but again, these things happen daily. You look throughout the market, there's always some stock that runs 20%, 30%. There's always a stock, at least once a week. There's some stock that doubles or triples. I mean, that it might be like a penny stock or something else, but there's always something where this happens. We have the potential, we have the setup here in Clove. It doesn't mean it's gonna happen. Um, it just means that the potential exists, and with the with a stock that's this undervalued and has this much retail interest and volume increasing, and you know, um, good news after good news after good news, which also serves as potential catalyst. It gives us the opportunity. It kind of um, strengthens our ability to see this end up playing out. Um, Kevin Lynch says it's Clove buying the warrants. I'm not sure. To be perfectly honest with you, I have no idea. Um, yeah. So the other thing that happens too, like ATOS, squeeze. I think it went up to like 9, and then it unwinds, right? Like, and that was a short squeeze play too. But the other thing that happens with gamma squeezes, and I've talked about this before, like, um, if a big move is entirely gamma related and not short related or not anything else, you're gonna see it fall back down fairly quickly too if everybody starts taking profits. Like, if we uh if we all of a sudden, that's exactly what we saw last time. We saw the gamma squeeze take us to 22, 23, and then we probably saw some FOMO buying mixed in, and maybe even some maybe a little bit of covering happening by short sellers, and the price ended up driving up to 28. But once it topped out at 28, and that was, I believe, on a Wednesday, now you saw people taking profit and selling. And once you get back below that top mark on the option chain and things start to fall back down, now the option chain unwinds and starts dumping, 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 and it's selling shares that it no longer needs to hedge. And that creates the exact opposite of a gamma squeeze. And then you're going to see it fall right back down. Not necessarily back down to where it started, like with CLOV. That other gamma squeeze, I believe, kicked off at shit. Let's just look. That other gamma squeeze, I would say, really kind of started right here around 750. And then this is where we saw the big jump, and that ran up that day from somewhere in the $9 range. Um, but you could see it came down hard before. I believe this was the Friday too, Tuesday, Wednesday, Thursday. That was the Friday. It closed the week around 14 underneath the $15 mark, which was kind of a significant number on the option chain. But it didn't fall all the way back down right away. But it did give back a shit ton, So, but it unwinds just as fast as it winds up, I guess is my point, So, if it can't hold up here because maybe some shorts cover and there's some extra buying, people exercising contracts to make the price hold, it'll end up unwinding and coming down. Now this time around, the option chain goes up to 43. If we get up above 43 and continue to run to, let's say, 60, and then fall back down and level out at 50, and we see like buying support come in and hold us above the option chain, hold us above 43, then we could stay up there. But as soon as we come tumbling back down below 43, I would expect to see this immediately, because the option chain is going to fall back down, and then it'll just level out somewhere new, you know. Um, and this is, I know that was a drastic increase, but we were trading in the $6 range. Now we're trading in the 8. I would have loved to see, a little bit higher. Like, let's say on the next squeeze, we get up to 43.50. And if that's not the short squeeze where things really pop off and get us into the triple digits, maybe it falls back down. But this time, maybe, hopefully we could settle a little bit higher, settle in at 15, level out there. And at that point, that's the new floor. And then you're buying in there because there's still short squeeze potential. Or for me, if I can get back in this stock at $15, let's say everything played out exactly like I just said. We went up to 60 or 70 or something. We fell back down. We settle in at, let's just call it 20. Shit, I'm a buyer at 20 again because I believe in this stock. I'll be buying the hell out of it, for the long-term potential. So that's my take on it, at least. That's what I'm thinking is gonna happen. Hopefully I'm wrong. Hopefully we get up there, things start taking off, maybe some shorts start covering, and we get into triple digits right away. And because then what ends up happening too is we'll have more of a sustainable, the higher we go, if we can finish the week blowing out the chain. And what I mean by that is, if we get up above 43 and stay up there and finish the week out up there, then we'll kind of have more sustained growth up there. Yeah, we're always going to see a little bit of a drawback off any sort of big run up, but it'll minimize that drawback if we can stay above the option chain, at least hold it the longer we can hold it. Michael says frustration is one thing, panic into a paper hand situation is another. If you're frustrated, good. It means you're still holding. Yeah, and I mentioned this the other day too, like might have been yesterday even, like if you're the type of person where you're watching the stock and it's just like stressing you the F out and you're like you can't take the volatility and the swings and all that, stop watching. And really like just walk away. Set some alerts and walk away. Go enjoy yourself. Go outside, get some fresh air. Go do something productive. Don't look at it. I like looking at it. I like looking at the rest of the market. I like watching all my different stocks if I have the opportunity to. When I'm at work, I can't. But I enjoy sitting here watching it and seeing what and kind of having a pulse of what's going on with everything else. Um, I enjoy doing it. The volatility doesn't bother me as much, but I think that's very important for your own mental health too. If you can't take it, just kind of walk away and do something else. Do something you enjoy and just believe in the DD, believe in, do your own research, and if you believe in the stock, why do you care if it hits $7.50 later on today? If you know that 6 months from now it's going to be trading for much higher. If we don't squeeze this week, doesn't the gamma potential expire Friday? What would that mean? The stock goes down Friday and late? No, doesn't mean the stock's going to go down. The stock price right now has nothing to do with the gamma squeeze. I mean, we're sitting right at max pain. So if you see some unhedging in the option chain, you're also going to see it on the other side too. We'll probably stay right around that max pain number if that was to happen. But I kind of went over it a little bit earlier, and I'll show it one more time because I know there's different people in here right now. But here's the entire option chain, right? Let me just refresh this real quick. All right. So, I'll just give you some big strikes. So $9 strike, 55,000 to 10,000. $10 strike, that's for the entire chain, 82,000 to 28. And then we'll go over here to 15, 93,000 to 10,000. That's the entire chain. If we just jump ahead and say, okay, let's just look just at, actually, here, I'm going to do it this way. I'm going to write down. So the $9 was 55. The 10 is 82. And I'll just take the 15 is 93. Okay, so now let's pull up August 20th. Yeah, we're going to be missing 25,000 there, but there's still going to be 30,000 in open interest after this Friday. $10, yeah, we're going to be missing 32,000, but that's still going to leave us 50,000 in open interest after this Friday. The $15 strike, 41,000 will be going away after this Friday if we don't hit it, but that's still going to leave 50,000 in open interest throughout the chain. So this option chain on CLOV has been loaded up for a while now, and it continues to load up. Like if you go back to April, when I first started covering this stock, this is the same type of thing that we saw. There was plenty of gamma squeeze potential days and weeks, not weeks, it was months that went by, where the monthly option expiration was loaded up and it may not have happened. And then you just see it continue to be loaded up in future weeks and future months. And, we've been seeing a lot of buying pouring in for the September and November chains and even January now. And all of that plays a significant factor in gamma squeeze potential. So someone's out there putting money into this, trying to catch a big run up. And, this is, like I said, this is what happened in April and March, and what ended up March and April and May. And then we ended up hitting one in June, and that propelled the stock up to 28. Yeah, we fell back down to 8, a little bit further than I would have liked. But what else did that do? It expanded the option chain. So the chain back then went to 22. Now it goes to 43. So now, if we hit another gamma squeeze, and that may be how this whole thing plays out. We might gamma squeeze up to 43, 50, get to 50 or something, and then find a new base at 20. But now the option chain will go up to 100, and then now the next gamma squeeze takes us to 100, and maybe it takes 3 months to get there. And that's why I also stress the importance of like taking profits. You do not want to, see this stock run up to $50 and fall back down to 20 and you're still holding on to the same amount of shares. At least I don't want to do that. Sorry, I'm way behind. Your pal Al, what's up? $12 lotto tickets have been bought. Probably just donated 30 to a hedge fund. Yeah, but I mean, and again, I'm not, advocating for this or anything like that, but I mean, when you look at it, right? Yeah, the gamma squeeze potential's there. You could buy this $12 contract for $3. And to me, for $3, you know, um, even if you bought one of them for $3, think of it this way: if you own 100 shares of CLOV right now, for $832 is what they'd be worth, right? Or no, that'd be $8,000 for 100 shares of CLOV. Wait, am I? Yeah, $8,000, right? I just feel like I'm tired right now. 100 shares of CLOV right now would be $832, I think. Either way. Um, yeah, because 100 shares times 800 bucks. Either way, okay. So it costs you $800, but for $3 more, you can come in and get this lotto ticket for this week. Just $3. And again, I'm not saying go crazy. I'm not saying sell your CLOV and buy, 100 of these. But for $3, now if we did hit the gamma squeeze this week, not only are you going to make money off your 100 shares that you own, right? You're also going to make an additional 100 shares worth of price action once we pass 12. And that's how you can increase your portfolio size without killing yourself in options and learning mistake, and making these huge mistakes. But, to come in and buy one for $3, yeah, I think that's smart considering the potential we have. And if it doesn't happen, you lose $3. Okay. Now, if you have a bigger portfolio size, you own 1,000 shares of CLOV, and that costs you $8,000. Maybe you buy 10 options contracts. That's $30. That's not a lot of money. In comparison to what you hold, in comparison to your portfolio. And I think that's what it comes out to too, is just having that balance, right? So if it doesn't happen and you lose $30, you still have $8,000 worth of stock. But if it does happen, shit, you just turned $30 into basically another 1,000 shares worth of price action. That's the way I play it. So Levi, you may be donating to a hedge fund $30 this week, but you may also be making making some serious cash. And maybe I'm just too much of a gambler, and I'm way behind right now in the chat, so I'm sorry. Davey says, "What's up, Ken? Good morning." Let me keep moving. Can you check cost to borrow on Ortex? Absolutely. Target short sellers, anything for you. It is increased up to an average of 3.89. 4 million shares borrowed now. Increase of 7.6% short interest. Max cost to borrow is 5.48. Louie, what's up? What's going on? Don't understand the CLOV shorts. There are so many stocks at 52 week highs and the stock market primed to fall. Why would you keep shorting CLOV? Some people are stupid, I guess, right? Or or here's the thing that they may want to look for a slow exit too. Like I know and I've said this before, I guarantee you most shorts are in a profitable position right now. I mean, they probably started shorting at 10, 11, whatever it is. But if you're short millions of shares, like think about how many shares are being reported, like legitimately reported right now on Ortex, 52 million, I think. So you can't just go in and buy 52 million shares back right now. You're going to drive this price up and then you're going to be eating away at your own profits, right? So I think it's more of a slow exit too. They want to drive the price down. cover, drive it down, cover, drive it down so that they continue to cover for short amounts without driving the price up. I think is also part of it. If you have an exceedingly large short position, you need to also, time your exits, I guess, is the best way of putting it. And we are seeing some people starting to flip, their positions up, which is basically that's what we want to see. Because we've talked about this. I know me and Ghost had talked about it a couple times. I want to say might have been Mac when he was on too. We talked about and that's what they are. They're hedge funds, so they're going to start flipping their positions as they're covering and start buying calls going the other way, and that way they can make money on the ride up as well. Um, Pablo said CLOV total warrant redemption was cashless. The fact that has stuck with me as they gave away an easy way to raise a ton of cash, trying to figure out what this truly means. So basically, my understanding is, and if I'm wrong, Pablo, if you're in the chat, let me know. But my understanding is that um, if they would have done it on a cash, like the other way, non-cashless, they would have been able to raise money, but it would have diluted the float way more. So what they're doing by doing this cashless basis is basically not issuing a ton of stock into the market, and that's what we want to see as investors. So it's basically helping us out as investors that they're not diluting the float as much. That's the simple answer to me, and also shows to me that they don't need the money, that they already know that what they have enough money to get by right now until they become profitable. They already probably project in their future that they're going to be much profitable, so they didn't need to dilute the float. Usually you only want to, because when you dilute the float, you screw over your shareholders. You absolutely should screw over your shareholders. And so to me, that is just showing that they didn't want to. Hey, I'll give you a perfect example, and it is what it is. But like AMC diluted their float by like 5 times, I think 4 times, 5 times over this last year, and that screwed over their shareholders. Like, their stock is not worth as much. Obviously, trading at 36 is worth a shit ton right now, but the value of each share has diminished. Like, when this thing goes back to trading on fundamentals, it's going to be worth 5 times less, considering that the company is doing the exact same thing because of all that dilution. And what they did was they didn't dilute the stock. They went with the cashless. That's my understanding. Vivek, what's up? I got a super sticker from Vivek. Thank you for dropping in. I appreciate it. If that really is Vivek, I'm amazed, and that's awesome. I doubt it is, but Vivek, if that's you, thanks for dropping in. I appreciate it. And whoever you are, thank you for the $5. I appreciate the super sticker. I appreciate everybody supporting here. Uh, that's awesome. All right, let me jump back over here. Let's see. Uh, Hedge funds have the capital to buy short-term puts and long-term calls to toy with the stock and profit on both sides. Absolutely, Matt, you're absolutely right. I know I just put up the wrong comment when I said this, but yeah, nah, Matt, you're absolutely right in everything you're saying this morning. But yeah, I mean, selling puts too. Um, short term puts, and then they could also sell puts, right? If they sell puts, it gives them the ability to acquire that stock at a shorter price and do it without driving the price up too. If you think about it, like, if I was short a stock and I'm getting ready to get out, and especially the way we've been seeing this BS market manipulation just happening in general, you can actually, let's just say I'm short the stock, I drive it down, drive it down, drive it down, get it to a place where I think it's kind of bottomed out, and then change the narrative and start, you have the media selling all these retail investors that this stock's going nowhere, it's going to zero, don't buy this stock, close bound to crash. And so then then you start selling puts, right? So now maybe I'm selling the $8 put. I know the stock's not going to close below 8 because eight's the floor. But you start seeing this increase in retail buying puts, and now as the hedge fund, I'm selling retail these puts, I'm collecting premium there, and then if it does get driven lower, now I get to buy the stock at a set price of $8, which is actually going to be cheaper. And so I can accumulate my shares in that way too. And yeah, I mean, there's a lot of different strategies that go into it. Are the shorts actually making any money with price sticking between 8 and 850? How long can they hold it here? People who are short actual shares, no, not really. I mean, they're probably been short for a longer time than we think, though. Like I said, like maybe since 10 or 9, and they're just slowly trying to get out without driving the price up. That's what I'm thinking, at least. But with through options plays, and maybe like what I just said, like with writing puts and things of that nature, they could slowly start to accumulate and collect money that through that manner by keeping the price stagnant there, and then just slowly just accumulate shares. That's what it's all about from their perspective. Lisa says, welcome to all the new peeps. Take a second and smash that subscribe button, like button too. Absolutely. It helps the channel out. I appreciate it. Let's see here. Scotty says, heading down to the subway back to Jersey. Okay, all right, Scotty. I'm sure I'm probably way behind and you already signed off, but thanks for joining in, Scotty. Appreciate you. Holiday option. Get my daily morning fix. Love the show, Coach. Let's effing go. Let's do it. Thomas, what's up? Nice to see you in here. Co-creator says Champion Vibe did a great segment on Clover in his live stream yesterday. Wonder if we were in the same pattern he predicted. Starts with the W. Forget what it's called. I didn't catch it. Man, I was traveling yesterday. We ended up not getting home till about 7 or 8 o'clock at night. But Champion Vibe, yeah, he's been doing a live stream every night. He covers a couple different stocks, does TA on it, and he does a great job. He really does. I have been checking it out. I was watching his stream, I want to say on Thursday night or Friday night. Obviously, like I said, I was out of town this weekend, didn't get a chance to check it yesterday. Thomas says, why do the volume charts never match the price action? Higher greens, lower highs, smaller greens, bigger lows. Are you talking about this MACD down here? Or I might be confused. I might need more coffee before I try to decipher that. I'm going to put a star next to it, maybe come back to it. Co-creator said he's got to go for a bit. All right, co-creator. Talked to her yesterday, not available yet in Colorado, but heard of it. Says she has clients in Arizona that have it. Nice. Co-creator's doing some digging. That I like it. I like it. Let us know. Let us know what you find out. And thank you for stopping by, co-creator. I appreciate it. Hey, why is everyone talking about CLOV? Oh, Tyzel, you got I'm gonna give you the brief rundown right now. If you're interested, if you so basically, you know, Clove's trading at $8 right now. Health insurance company that also has a technology side to it. They have this artificial intelligence called Clover Assistant that they use. That's, I think, going to revolutionize healthcare. Basically, what it does is it helps doctors when they're making their diagnoses and treating patients, and it helps doctors to prevent them from making mistakes and give them accurate recommendations to help speed up the process. It's already proven to basically create healthier patients, as the ratio on patients who are using Clover Assistant compared to patients who aren't, it's costing the health insurance companies less money to cover them. So basically, Clover Health is using this AI right now to treat its Medicare patients through Medicare Advantage plans and also through direct contracting. But they just recently announced that they're gonna be they've got this thing to where it can integrate into all these different cloud-based systems, and eventually it's gonna be leased out to other insurance companies. Think about like Amazon. Amazon sells products, right? But at the same time, their AWS software that they use, they sublease that out to other people who sell products to their competitors because it's a profitable thing as well. And that's what I see the Clover Assistant doing. You know, the AI and the tech side of it. Um, to me, this is more of a technology company that's using health insurance to build their tech. So, you know, as this Clover AI expands, that's what makes this a hyper growth stock. That's why everyone's talking. That's why I'm talking about Clove. But more recently, they just had quarter one earnings or quarter two earnings and 140% growth year over year in revenue. They doubled their lives under management from quarter one to quarter two. So basically 100% growth quarter to quarter. And the other big takeaway there was the AI that I'm talking about is set to manage $1 billion in revenue this year. So a lot of growth, a lot of great news for the stock. The stock's highly shorted. The stock has a ton of open interest on the option chain, which also makes it good for a gamma squeeze potential this week. So there's all kinds of exciting stuff going on with Clove, and really I think that I've said this multiple times, but I think buying into a Clove right now at $8.24, you're getting in to a stock that has short squeeze potential where you could almost be sure that you're not going to be a bag holder. Okay. Um, and what I mean by that is there's plenty of short squeeze plays out there. If you want to get into a short squeeze play, you know, there's, I mean, we have two other tickers up on the screen that I think are still going to end up taking off, but you can get into 36, get into AMC at 36 right now. And if it goes back down to fundamentals, you're going to be out a shit ton of money. You can get into GameStop right now, and if it goes back down to fundamentals today, you're going to be out a shit ton of money. You might have to hold on to GameStop for years before you get back to this price, until the company finishes their pivot and their transition. If Clove doesn't squeeze today, it ain't going lower than $8. And that's my opinion, but we're at the bottom right now. So you're looking at a short squeeze play where you can get in at the bottom. So that's my take. I know that was kind of longer, and now I'm even further behind in the chat. I did not see Al trades last night. I got home hella late. I didn't watch nothing last night. Did he pull the video? What's up with that? It wasn't there this morning after posting it last night. I don't know. All right, let's see. Co-creator said Clover Health will soon be available in Colorado from what she heard. That means more growth. Yeah, I mean, and co-creator on top of that, like, we talk about the growth, right? So they doubled their geographic footprint, I think, from quarter one to quarter two. And right now the company's only in, I think, like 13 states. And there's a difference there. Like, I know we were talking about this the other day, and it's only maybe 9 states or 11 states for the DC model, which the company's more profitable off the DC model. Whereas the MA models that they were in are capped on what they could make. But as they continue to expand, let's just even call it, 15 states, which I know it's not, but if they're in 15 states right now, that still gives them the opportunity to more than triple their geographic footprint, in regards to how many states they're in across the United States. But then, look at the counties. I think they're only in like 209, and those are old numbers. I'm sure they've expanded more since we talked about Florida and some of the other stuff. But, they've got so much room for growth across the country. And as the Clover Assistant continues to grow and expand and provide for healthier patients, I think we're going to see more people wanting to get onto this Clover Health insurance side of things. And then as the AI ends up going into other insurance markets, it doesn't have to be just for Medicare, right? It could be just for regular health insurance insurers too. So a lot of room for growth. Co-creator, I think that's amazing that it's going to be getting into Colorado. Um, and hopefully, I saw somewhere the other day that I was looking up Clover Health and I saw that they were hiring in California, I think, or something like that. Now, I don't know if they just have offices here for the IT side of things or what, but there's definitely room for expansion out here. Um, Speaking of which, L Train, uh, you know, um, pointed something out yesterday that I know mentioned on the stream yesterday, but basically saw, I think it was on LinkedIn, that Clover Health was looking to hire a director of stars, like a stars director. And what that is they wanted someone to come in and build a team to basically help get the company to 4 stars, fast and get this thing done. And what that does for the companies, once they get a 4 star rating, they end up making an additional $500 a month per patient. I mean, that's insane when you think about how much revenue that would make them profitable instantly. And so, um, that's another big thing that's gonna be coming in the future. And I think that's right around the corner. I think because I mean, all we've been seeing is CLOV getting praise from the medical industry right now, getting honored and getting the speaking at these forums and receiving awards and getting invited to speak places because people are seeing that Clove is actually about helping people and not just a money grab. That this is a different type of insurer. This is someone who's trying to change the game. This is a disruptor. And so I think we're going to be at 4 stars soon enough. I really do. um Matt says I could see this at $600 a share or more over the next year or two. Yeah, it might take a little bit longer to get to 600, but I think that's a realistic price target, and that's why I say, I'm always gonna own some Clove. I really am. Like, if we get a short term squeeze, I'm gonna sell and buy back in on the dip because I'm a trader at heart. But I'm always gonna own some Clove. I'm always gonna come in and um, even if it ends up trading at fundamentals, I'm still going to buy it at fundamentals because long term, this is a disruptor. This is a hyper growth stock. This is a stock that's going to get to triple digits and just continue to expand. Again, think Amazon. You know, they have the side where they sell their products, which for Clove is health insurance, and there's plenty of room for growth there, especially if the age for Medicare goes down to 60. But even if it doesn't, it's a recession proof business. People are always going to get old. People are always going to need health insurance. Then they have the ability to expand outside of Medicare and become just like a regular insurer covering anybody. Um, but then there's the other side, the AWS side, the software as a service side, the tech, the AI. They have that. They can use that. They can sell it to other insurers. Um, Mac Bracken was on here a couple weeks ago and was talking about how they could sell that to countries. Like, think about socialized healthcare, like in Canada. They can give them this software that's going to make for healthier patients. And how many lives under management is that now? And you do something like that in a socialized healthcare country, and you know now it's making for healthier patients. It's adding on to the AI. The AI is getting stronger and smarter the more bodies and lives under management that it has. I mean, it's a win-win for the company. It's a way for them to make money. It makes the software better, and now they can market it to new people and to new customers. So yeah, I mean, there's just, when you really break it down and do your research and everything, there's just so much good stuff happening with this stock aside from the squeeze potential. But to me, the squeeze is just the cherry on top. If we can hit a squeeze, cool. If we can't, I this stock's gonna make us a ton of money regardless. I think this stock is a millionaire maker stock. Buy enough today, you'll be a millionaire one day. Again, without a squeeze. This isn't that's I'm not talking short squeeze or gamma squeeze or anything like that. Um, Only thing that sucks is for now I'm forced to choose United Health for my plan. Oh man, just keep leaving them bad reviews, co-creator. Uh, uh let's see. Zeke for Bleak, what's up? Lisa says, Tyzel, welcome. Hope to see you again. Coach streams every morning. Also check out Tarheel Blue this afternoon. Yeah, Tarheel does an afternoon stream. He does Power Hour, but I think he's been signing on closer to. Let me see if I could do my East Coast time zone. So would it be 2 o'clock? I think he does 2 o'clock Eastern. If you're on the West Coast, 11 a.m. is when he's been typically signing on. But every day, Tar Heel for sure will be doing a Power Hour stream, which is that last hour of the market. Did someone make Al take down his video? I didn't watch his video. I am on a group text with Al, and I haven't been paying. I haven't been paying attention to it. Let me see. Do you have any thoughts on EVGO or LAC? Thanks. I could check it out real quick. Um, I know a lot of those EVs looks like they got hit pretty hard yesterday. Zev was one that I was talking about on here because I know I was hearing a lot of great things about it and stuff, and it looked like that one got hit pretty hard yesterday. Um, I don't know much about EVGO at all. I got to be honest with you. Um, what is EVGO? I'm not even sure. It looks like electronic vehicles. Looks like yesterday announces new nationwide plan options, loyalty program. Outperform $18 price target it got yesterday, and it's trading at 9. Huh. I'm gonna write that down. I always like to see that when you see like some price targets come up that are like double what the stock's trading at right now. That's when you can, to me, if I'm gonna buy, obviously I like to play momentum plays, but I love to find undervalued stocks, and it looks like it's getting ready to potentially create a double bottom too. So, EVGO is one that I'll keep my eye on. The other one that you brought up was LAC. I don't know anything about this stock. Let's see. LAC, unusual options activity. That's always fun. Bullish sentiment, call sweep, $12.50 strike for September 17th. And right now the stock's trading at 15, trading downwards. I don't know anything about this one. Yeah. All right. Looks like AMC is starting to run a little bit here, and up 4%. GameStop looks like a similar chart, but not, what is it up? 0.8%, nothing. CLOV's down 3%, trading at 820. Let me go catch up in this chat a little bit more. Micro Badger says, if we get a decent squeeze, totally going to take advantage of the accompanying IV spike to sell calls on my shares. Yeah, so I mean that's one way of doing it too. I mean, I was thinking about that last night, right? Like instead of selling, if you really wanted to make sure you held on to your shares, you could take advantage of that and really just bring down your cost average and put some cash in your pocket. So, for instance, let's just say you own Clove at $10 a share, just because it's a nice even number. We squeeze up to, let's say, 50. Okay, so now we're trading at about $50, and you're up $40. You're at 400% gains. Now I'm gonna pull up AMC's option chain just because I know it's got higher IV right now, and and it's trading closer to that $50 range. So let's say, like, at the time, you could then go sell some covered calls for a month out, or because you already own the shares right when we get to 50, and maybe sell the $75 strike for a month out. And because IV would be higher than shit, probably 3 times 4 times higher than what AMC's trading at right now, you might be able to sell the $75 call for $1,000, which basically covers your entry cost of Clove. If you're following me, you paid $1,000 for those 100 shares at some point. We spike up to where now those shares are worth $4,000 because we're trading at, or $5,000 because we're trading at $50. Okay, but then you go in and you sell a covered call for $1,000 for a month from now. Now, basically, what that does is it lowers your cost basis to zero, and you get to put that $1,000 in your pocket, and then you still keep the shares. Right now, if the stock continues to go up, yeah, someone could buy those shares from you for 7,500. But I mean, shit, at that point, it's a free 7,500 because you already covered your cost basis, or whatever, or even if it just makes your shares that much cheaper, you put some cash in your pocket. Or if we end up kind of dipping down, and let's say we come down off 50 and start trading at 30, you still own your 100 shares at 30. And you have $1,000 in your pocket to go invest somewhere else or buy more shares or whatever. So that's a strategy as well. Like, if you don't want to sell at the top, you can always sell covered calls at the top, bring down your cost average, and continue to hold. Let's see. The boss says 1 day away till WGW. Absolutely. Matt C says, to add on to what you're saying about the industry versatility of Clove Assistant, Clove could integrate blockchain and go nationwide on handling data and PPO, workplace healthcare options, etc. Absolutely. You know, there's just so much as they're building this tech that's gonna revolutionize, or has the potential to revolutionize healthcare. Just getting it out there, and I think when you see, like, Vivek talk about the company, you could see that to him at least, it seems like the goal of this, obviously make money, but is to change healthcare and change the way tracing or patients are treated, and make healthier bodies and make healthier lives. And one way of doing that is going to be getting this Clover Assistant out to everybody. Um, let's see here. Godfather. I know all you guys are talking about it, so I'm not going to put every comment up, but it sounds like Al Trade's video is gone. he uploaded one last night. I didn't even get a chance to watch it. I don't know how controversial it was, or if that's even why he took it down. But what's up, Godfather? Nice seeing you. Div Zero says it's a gas station location for all electric vehicles. You're talking about that EVGO. Oh, Tar Heel said that someone's getting a tattoo on his live stream on Thursday of a Clover, I think on his ass. Something like that. Something that got brought up in the Discord last night, I guess, or something. But that's gonna be on Tar Heel's Thursday stream. So Levi says Discord After Dark was wild. LAC's a lithium mining company. Okay. Fluffer says I'm out. Thanks, coach, and everyone. Fluffer, I didn't even know you were in here. You didn't say nothing today, but thank you for coming. I appreciate it. Hello and goodbye. Let's see. Zeke says last three candles all wick down off of 820. You're probably looking at a 1 minute. And this is probably older than shit. Sorry, man. I'm hella behind right now. Let's see. All right. Looks like AMC and GameStop are starting to pop a little bit here. All right. Faraz, we talked about it a little bit, but basically, I mean, I don't know. It's just why is the CLOV free float showing up different on various trading platforms? One thing I'm thinking is, I mean, it doesn't make sense, right? I mean, I haven't seen this with other stocks really ever where it's like this much discrepancies, but Clove does have a lot of Class B shares, which I think, and some got converted, but then you also have the whole warrant thing going on right now, where some of those are getting, like basically converted over to shares too. I don't know if that has something to do with it. It may just be an opportunity to, I'll tell you this much: a higher float is going to equal lower short interest, right? And so if you're trying to kill the short squeeze buzz that's happening with the stock, you could basically fudge the float numbers and not have to deal with messing around with any of the other data. Then the real data would just come in and just appear to be lower short interest numbers just by increasing the float. I don't know if that's the case. It could just be that, the interpretation of some of these places as they're putting warrant information in is different. Yeah. So we'll just have to see. It could be that some people are updating the float slower than others. I'm not sure, but I always, I never used to be this way. But more and more so now we see all this manipulation. I always like to look at everything with a little bit of skepticism. And I would say that, there's probably something nefarious going on at some point somewhere. I think the Eeyore thing was a mistake. He releases so much info at once. Then again, the data, um, it's such an issue. People can't make informed decisions. Yeah, we don't get the right information. We just don't. Even the data that S3 gives us, or Ortex gives us, or iBorrowdesk gives us, or Fintel gives us, it's not everything, right? So we don't necessarily know. We're kind of hamstrung as retail. They're not giving us all the same information that some of these bigger players have access to. Work is so much easier when work doesn't get in your way. Do you have MMAT on your radar? I was looking at MMAT for a while, David, and I know that I could be completely off base. There's so many stocks out there, but what I remember hearing about MMAT was they were going to merge. It looked like it was going to be, have this big blow up and everything. And then there was like some dilutive event or something along those lines. I could be wrong. That kind of sent it spiraling downwards. And I mean, I'm always in for like an undervalued play. Yeah, see, it went up here to 28. That's what I thought I remember, and then it fell back lower than its kind of its previous floors. But this was a penny stock at some point. So, I mean, again, I don't know much else about it, but I remember reading some pretty good stuff about it. But these type of things are rough. I think once it kind of finds that floor and shows momentum and starts to like pick up and move in the opposite direction, um, could be a nice entry point. Looks like there's a lot of room to move up from where it's currently trading at to get back to those previous all time highs. Um, what's the biggest risk of selling a covered call? So basically, getting your shares called away, right? So if I have Clove right now and I wanted to sell the covered call, let's say the $10 covered call for this week, you're limiting your upside. So if it doesn't close above 10, I just keep that premium. Contract expires worthless. I got to put some cash in my pocket. But the biggest risk would be, I guess this isn't the risk. This is more from a greed standpoint. So if it, let's say it rips up to 15 and now someone's going to buy those shares for me at 10. So I missed out on that $5 potential, but that's not the biggest risk. The biggest risk is you need to hold on to those shares, um, regardless of what happens, because you're on the hook for that covered call, if that makes sense. So that would be your biggest risk. Like, let's say you sell a bunch of covered calls against your stock and, for like an October expiration date, and all of a sudden this stock starts going down to like $7, $6, $5, and you're kind of like stuck with these shares now, right? I mean, your broker is probably going to make you keep those shares as long as that call exists. But that being said, you can always just buy out of the call contract so that you could sell your shares if that's what you wanted to do. So if you sell a covered call, it just works the exact opposite. So now to get out of that contract, you just go buy a call contract for the same strike price, and now you're out. You're done. You still own your shares. You can walk away. But so yeah, I mean, I guess limiting your upside looks like that's what Zeke said too. Um, he comes, says market hasn't even been open an hour. Here I am thinking it's like 2 p.m. Used to this shit. Let's F and go. Double down. Let's go. Big Daddy Roro said he liquidated all his CLME and rolled it back into Clove. Pablo, what's up, Pablo? Zev is kicking my nuts. I actually bought a couple Zev calls yesterday. I bought 4 of them, just to see what was going on with it, and it had, I guess, worse than expected earnings and dropped significantly overnight. But at some point, again, I think it'll get to a point to where it's worth the buy. I mean, really at the end of the day, and I know that this goes against everything I'm talking about with Clove, but Clove's kind of a different beast. And I said that earlier in the stream too, that like, this is different for me. Like normally I just trade without emotion. It doesn't matter. If I see that a stock is undervalued or has momentum, I'm buying it. If it starts going up, I'm going to make a profit and sell. If it starts going down, I'm selling before I can lose a certain amount, whether that be a mental stop loss or one that I'm setting. So eventually, as we start getting into some of this stuff, like, you look at a company, and I'm going to bring Wish up just because it's kind of a popular stock right now. Wish right now, I don't know much about the company, but I know that it's been in like kind of a free fall since they had their earnings. At some point it's going to be grossly undervalued and overshorted, and at that point I'll probably become a buyer. um I'm just keeping an eye on it right now, but it had this big gap down and it's going to continue to probably go down, I would imagine. But once it does, uh hell yeah, I'll get in there and be able to maybe ride it back up. And that's just one example, and that's a company I don't really know shit about. But you just gotta, wait for a stock to have momentum and jump in and make some money off it. He, headline on Friday: Redditor gets meme stonk tattoo on ass. Oh man, that's gonna be funny. I'll hopefully be able to check that out tomorrow. Al got too enthusiastic. Okay. So he took the video down. iBorrow showing 3 million shares return. Let's get an update real quick. Looks like, let me see here. I'll pull this over. Um, so Ortex, I know you said iBorrow. I'm just looking. Ortex still showing 4 million differential. Cost to borrow average 3.8. If we go to iBorrow desk, Yeah, looks like it had 500,000 and now 3.3 million returns. So a huge difference there. Um, just in that 15-minute cycle right there. Let's see. D Worms in the house. What's up? Midwest Tom. I don't think I've seen you in here before, but thanks for joining. Coach, I realize the hedge funds are driving the price down to try and break our spirits. It won't work. But it is certainly really annoying to see so much downward pressure when we know this is a good company. Yeah, yeah, it is. Um, and trust me. I mean, I'm getting frustrated too. But and I've said this before too. Like with me, I don't have patience, and so in order to maintain my patience in a stock like Clover or GameStop, two that I've been holding for a while, um, I have to keep some of my account. I can't go like all in on one stock. I have the majority of my position is now Clove, with GameStop in a close second, and then I got to keep like 20% of my account to just day trade and play other things and swing trade and hopefully make some money to dump back into Clove, because otherwise then the frustration would really be getting to me. But because I'm still sitting here and playing other stocks, and I guess because of that it helps keep my mind off of that side of it, and I don't care about the day-to-day gains in Clove because I'm looking for a bigger gain, a long-term gain or short-term if we hit a gamma squeeze. We hit a gamma squeeze tomorrow, I would be pretty damn excited. If there were only 500K and then there were 3.5 million, doesn't that mean they were returned? Doesn't mean they used them. Yeah, so you know you could borrow shares, and what a lot. Let's say I borrow 1 million shares. Okay, so I can go borrow. There's 3.3 million available right now on our borrow desk. Right, 3.3 million. I can go borrow 1 million shares. That doesn't mean I'm going to short them into the market. It just means that I'm going to hold them until I'm ready to short them in. So potentially someone could have borrowed these shares and not used them. Um, or it could be a combination of both. It could be that this was a little bit of covering here and you saw some return, but then at the same time someone else that was gonna short saw this upward momentum and said, screw that, I'm not jumping into this short position, and they returned theirs. I mean, there's so many different scenarios, but yeah, it could absolutely be shares that were not that were borrowed and never used. Ghost, what's up? What's going on? I think Ghost may be coming on tomorrow morning. I believe we're gonna talk later on today and figure that out. But I'm excited about it. Had a lot of fun the last two times when he came on last week, and we're gonna talk later on. And I think Ghost might be joining us tomorrow morning, so that might be something to look forward to as well. Um, I like Wish 2022 calls. Have a decent purchase. I mean, I haven't even looked at anything on Wish right now just because I'm not ready to open up any new positions, and I think it still might fall a little bit more. But yeah, that's kind of what I'm thinking. Like once this thing drops down to a certain point, why not? You know, looks like they don't have 2023 leap, so any calls that you're buying right now on Wish would be December. Um, and who knows? I know Degenerate had put something out on Twitter the other day about, if you like Wish at whatever, wait till it gets to $3, then it'll really be oversold. And I guess that's kind of where I was thinking, right? Like if this stock ends up continuing to go down, which is totally possible, and starts getting in like this grossly oversold levels, that's when I would become a buyer, and look to ride it up. Hey, I'm just looking like BlackBerry. I mean, these stocks aren't up huge, but BlackBerry daily chart or 5 minute chart right now looks like it's getting a nice big green candle. Um, and the only reason I have BlackBerry up is because it does tend to sometimes trade with meme stocks, and AMC right now is, I think, just hit What's going on here? Oh, this is Wish. I took AMC off. There we go. AMC just hit some nice highs of $38. And GameStop's also running up. It looks like everything is shit. DraftKings isn't even a heavily shorted stock from what I know. And that's even moving up. So I'm not sure if this is a market wide thing or just kind of a meme stock thing, but we're starting to see some green here. AMC's been going green, but almost at 7%. And we have seen that on, some of the AMC big days. Clover move with it. Same thing with GameStop. A lot of these stocks tend to trend together. And, maybe we found our bottom now over here at this 720 mark and we're ready to start ripping. Really, we want to get above VWAP before we start getting excited. Is there a standard time frame after earnings we should expect price upgrades or downgrades? Not necessarily. I mean, shit. A lot of times you'll see that stuff come in like immediately. Like someone announces earnings and you'll see it within the next couple days. Like, the it's just goes by the actual analysts and um, probably when they're able to accumulate the amount of shares they want before they upgrade the price target, to be honest with you. But usually you'll see it like if they're covering a stock, like right away. We haven't seen any new price targets yet. Div said, I'll tell you, I'll never invest in a pharmaceutical company again. ATOS and SESN has cured me of all desire to ever invest in this area. Yeah, it's rough. You really gotta like get in on those things at the bottom or as close to what maybe you think is the bottom, and find a fairly decent price, maybe based on technicals or something where you think you're getting in at but even then, bad results, bad phase 3 trials, phase 2 trials, something, and the bottom could just get pulled out from you. But then you can also hit some big runners too. I just with the pharmaceutical plays, I normally try to get in at a decent price where um there's still a ton of room to grow, and then hopefully like $5, $10, somewhere around there, almost like where we're buying Clover right now, even though that's not a pharmaceutical play. But you get in and it's kind of like you're buying these shares, and you might be sitting on them for 3 years, and you just got to kind of like take that approach with it, like, I'm just going to accumulate these shares and let them sit there, and one day if something good happens, they'll take off, and I might make 10 times my money, or it could be the other way around where it doesn't work out and it goes back to pennies. And that's why you want to just use a little bit of a small portion of your portfolio on those type of plays. And really, like, I have a buddy, he'll have like 5 or 6 of them going at once, and just maybe eventually you build up to a point to where you maybe own 500 of each of them. And if one hits and 3 don't, the one that hit pays for the other ones, or something along those lines. Yeah, BlackBerry is really starting to move right now. Looks like maybe it's trading with AMC in the algorithms. Hmm. I'll just pull that up so you guys could see what I'm looking at. There we go. Let me see. I haven't even looked at the volume today in a while. CLOV volume right now at 6.6 million. So not anywhere near what we've been seeing recently. Um, in the recent days, I should say. Let's see here. Stock Hunter says Ghost just posted a good read on Reddit. Check it out. Okay, let me see. Maybe I can pull it up and just see on here. I'm not going to read it on here though; it's take too long. But I'll definitely I'm going to pull it up so that I can see it later when I log off. But you guys that haven't yet either, I always put the link to the Reddit post in the description of my videos, to the Reddit subreddit for Clove. make sure you guys go subscribe and check it out. There's a ton of great information on there. Um, and I see Ghost posted 32 minutes ago called The Reversal. So I'll have to look at that in a second. But here, I'll even post the direct link on there too, so that you guys click on it. And if you haven't already, join the CLOV subreddit too. Let's see here. Coach, can you explain why the market makers actually have to hedge and it affects the price? Oh, you mean for like gamma squeeze potential hedging? Yeah. So, if you wrote a call, let me see, I got Wish up right there. CLOV. If you wrote a call contract, like there's two ways of doing it, right? So you can own the shares. Like if I own 100 shares and I write a call for, let's say, the $13 strike or whatever I want to write it for, um, I own those 100 shares. Whoever bought the call contract, if we end in the money, can exercise them and then buy my shares off me for $13. I don't hedge anything or anything like that. I own the 100 shares and I'm basically putting a contract out on them. Now, market makers and institutions and other people that have like higher options writing capabilities can write naked calls, meaning they don't own the underlying shares. So, no one wants to lose money, right? And they have algorithms that will prevent them from losing money. So what happens is, you look at the delta of the $9 strike right now as 0.25. So that means that if right now, if you were to buy a $9 strike call contract, the market maker will probably buy 25 shares right now to hedge that position. Right now, if they're selling this contract naked, they'll go out and buy 25 shares. That's just to make sure that, if we finish above 9, they already have some shares in their back pocket. Now, and keep in mind, that's for the $9 strike. Price right now is trading at 830. So they're already ahead of the game, right? They're buying 25 shares at $8.30. And, if we finish above 9, they're going to sell those shares to you when you exercise for $9. And they're collecting the premium on top of that. But then now, so they have this algorithm worked out where as the price goes up, let's say the price goes up to 840, this delta is going to go up. And as the delta goes up, let's say that the delta goes up to, let's say, a 0.50. So now the market maker is going to buy 25 more shares through their algorithm at $8.50. They still have a cost average of what, 840-ish or something like that. And now they own 50 shares. Price goes up, they continue to buy, but their cost average is below $9. And now eventually, once we get deep in the money, they may end up having to buy shares at $10. But when you average it out, their cost basis on those 100 shares is going to be less than 9, and that's all they care about. They now own 100 shares at less than $9. You're going to exercise. They're going to sell you those shares for 9. They made money. So that's why they end up having to hedge. That's what creates the gamma squeeze, because all this buying that I'm talking about that their algorithms do, well, buying drives up the price. And then the more it drives it up, the more the price goes up, the more buying they have to do. And I mean, this doesn't happen like on a daily basis on your regular stocks like Disney or anything like that. But it does happen when you see an option chain that's like totally lopsided, where there's all these calls outweighing puts. Doesn't happen all the time. Obviously, they stand to make money by just keeping the price where it's at right now and letting all that premium expire worthless. And now they just get to keep that, and they don't have to do a bunch of buying and selling and everything there too. So they're going to make money regardless. But that's essentially what that hedging does and how it affects the price. I hope that makes sense. Narwhal's in the house. What's up, Narwhal? Bud says his CLOV being kept down by shorts. I would assume so right now. That's probably what's happening. But This price is definitely being suppressed. It could be by short sellers, but then there's also market makers who are trying to keep this price at max pain, who also have the ability to like really manipulate the price, right? By through order routing. Um, I'm sure Clove is an analyst most closely follows stocks since it's so small and less popular. Yeah. And the other thing, with that too, like some of the analysts that we've seen actually cover this stock in the past are short the stock or long close competitors. Two, um, with AMC and GameStop, we saw a lot of analysts just say, you know what, we're dropping coverage, meaning we're not even going to cover this stock. Not while it's got this meme status, not while it's going crazy, not while it's trading way beyond fundamentals and all this kind of shit. And so you may actually see some analysts that don't want to touch Clove anyways, because nobody wants to be wrong. No one wants to put a analyst price target on something, and even if they put $20 and then all of a sudden Clove shoots to 100, now everyone's saying, "Oh, you suck as an analyst." You were way wrong on that. Even if you're wrong in the right direction. So I think there's also something now to where like a lot of these analysts don't want to touch these meme stocks. And I don't really consider Clove a meme stock, but it is. It is. I mean, it's tied in with them everywhere, so it absolutely is. Um, and you know, the analysts that are covering it were giving it these shitty price targets again because they were short the stock, and that's facts. You can go in and look it up. I mean, a lot of them they were short. They had a short position in the stock, and I think that's going to change though. We just saw, a ton of institutional buying yesterday. We've been seeing institutional buying coming in for it feels like the entire last month. Just more and more reports of institutions increasing their position or opening new positions in the stock. And, like Credit Suisse, we saw um, came in with a long position. JP Morgan, I think we saw come in with a long position. So I would imagine at some point they're going to give a good price target now, which is absolute bullshit in itself. Don't get me wrong. I want to see them give us a good price target, but I mean, how shady is that? That that's not considered market manipulation. I establish a short position in something. I come out and basically first I establish my short position. Then maybe I have people who pay me for my analyst upgrades and downgrades, and I give them the information. Now they short the stock, and then I come out and publicly release, a downgrade in the stock. So what's that do? That's going to get people to sell. It's going to get other people to short, and now I'm making money on the way down. Then I come in and flip my position, cover my short position or, sell my puts or whatever I'm doing, flip my position, go long on the stock, buy calls, do everything else, release that information to my insiders like, hey, our new price target for Clove's $18 now. Give them an opportunity to buy up the stock. And then I go long. And then I release that price target to the public, and now the public it drives in a bunch of public interest. So it to me that's market manipulation at its finest, and if that's legal, I don't understand why people complain about us sharing information on Reddit. 1 second though, I just heard a loud ass noise in my house. I want to make sure my kids are okay. Hey, what's going on? What's going on? Oh, okay. Scare me. All right, I'm gonna be off in a second. All right. They're just messing around. I was thinking, I heard like some yelling, like, man, I better go check. Let's see here. I'm way behind again. I think of CLOV as a value stock, and a lot of the others, which good example, are just swing trading. The difference to me is always the product. Yeah, no, I mean, I really, in terms of this being a value play, it's way undervalued. And honestly, after this does pan out, I know I said this hasn't really been my trading style, but and it is a swing trade regardless. But if this pans out with the short squeeze and the gamma squeeze potential, um, like I said, I'm going to be getting out and then reestablishing my position when it gets back to undervalued. But then I might start looking for more undervalued plays like this. If it doesn't squeeze or gamma squeeze and it ends up being more of a Tesla style, like slow stair step and climb, shit, I'll just be in Clove for the next 3 years. And if I continue to make money off it, I don't care. I'll stay in it for longer term. Kathy Wood should jump on Clove. Fits into her picks. Absolutely. Zeke's pointing out that we're over VWAP. Yeah, we got there. Not a lot of volume behind it. We want to see more volume in this candle to really be, to show that we are there. But we are holding these moving averages too now. Okay, on this, at least on this candle, and it looks like with this wick pushing up here, um, that we're holding here as well. There wasn't a lot of volume behind this candle, so now we're seeing kind of this downtrend. But if we can bounce off this moving average, we might continue to just stair step right through this. What's VWAP for? Volume weighted average price. So most stocks tend to trade somewhere around VWAP. It's basically taking the volume, right, for the day, and in the time frames that we're looking at. I want to say it's like the last 40 bars or 30 bars. I forget exactly what it is, but it's taking it's also taking like the same the volume, the average price where all the volume's coming in and everything else, and it's coming up with a figure. Okay, so this figure right now, it's saying VWAP's at 832, which is exactly where we're trading at. Now, that doesn't mean that the stock is going to finish the day there. You look at like DraftKings, VWAP's 965. It's trading at 977, or that's BlackBerry now, 977. Um, AMC VWAP's 3719. It's currently trading at 3789. But it is a pretty decent indication of where the stock, is going to kind of flow through. If we're trading above VWAP, that's always positive. We can continue to just climb well above it for the rest of the day. If we're trading below, that's usually a negative sign. You always want to be above it. And it's a lot of times it's used as support and resistance because so many traders watch that mark. That's where a lot of buyers will enter in, so it acts as support. Or if we're going up, it's where a lot of sellers will exit, so that acts as a resistance to prevent us from going higher. Um, but yeah, it's just another indicator tool. To me, I think this is the strongest tool to use on the chart, in terms of, seeing what trend a stock is in, if we're above VWAP. Like right now, if we were to bust through VWAP with some volume, let's say there would have been more volume behind this when we busted through. To me, that would be like a day trading buy entry point. Slamming through VWAP with volume would be like, okay, this is a sign of a strong trend. I'm getting in, and now maybe I'll ride it up and take some profit. And then when it comes down, maybe that's like a time to short it down to VWAP and then cover there. I mean, there's a lot more to it, but VWAP's a great indicator to have on your chart. I'm skipping over hella shit now, guys. I'm sorry. I'm way behind. Um, Levi said just got a tornado watch. Looking at the radar, this could be fun. Oh man, I don't know what state are you in, Levi? Um, yeah, banks can do that. They don't. I read somewhere they are subject to U.S. laws when they have an obvious interest in an upgrade or downgrade. Um, and I saw that. Who said it? I just passed it up. Thomas said, "What trading platforms do everyone use?" And I see some of you guys are saying it in the chat. I'm using Thinkorswim right now. I was using Webull yesterday on my laptop because it works better. It doesn't take up as much memory. I also trade with Charles Schwab. So and their platform is called Street Smart Edge. So a little bit of everything for me. A goes in the house. Says Levi's gonna pull a Lieutenant Dan. I noticed Ego's got a new avatar or whatever too. Looks like a dumpster fire. I like that. Let's see. All right, shit. I think I got caught up down in the upstate of South Carolina. Down in the up. That sounded kind of weird. Down in the upstate of the South. A lot of you guys are in Carolina. I think D Worm's in Carolina. Tar Heel's in Carolina. Um, I don't know. I might be opening a Webull account for my reverse Pablo ETF. Man, I don't know if you were in here yesterday. I think you were when Pablo was talking about buying Zev, or maybe it was you that said to put it in the reverse Pablo. Maybe that was on Twitter. I get confused, man. I had so much going on yesterday, but I ended up buying some Zev calls. I should have just did the reverse Pablo. Um, all right, where we at here? It's almost 8 o'clock, guys. I'm gonna end up signing off here shortly. Um, I appreciate everybody coming in here. Before I do sign off, I just want to say a couple things. First off, make sure you go check out Tarheel Blue. He'll be doing a live stream later on today. He does Power Hour, but lately he's been getting on somewhere around 11 my time, which is 2 o'clock for those of you on the East Coast. So in about 3 hours here. But also, it's important that you go on and you not only when you subscribe, but hit the bell notifications because like when he does decide to go on early, you'll get notified. If you hit the bell on my thing when I go on early, like this morning, I jumped on it. I think 5:15 instead of 6. You'll get notified. I'll always be on at 6 a.m. every day, but if I can, I'll jump on early. I have fun. If people continue to get on with me early, then I'll do it. So, definitely hit the subscribe button, but hit the notification button too. That way, Also, so just looking around, it looks like CLOV is getting ready to kind of bust through VWAP. We've held these moving averages now pretty nicely on these last two candles. Hopefully, we can get a nice crossover here. This is a 5-minute chart, to really give us that push and probably get, I would imagine, hopefully, just looking at yesterday, we saw this drop early and and then continued to kind of move upward for the rest of the day, closing as high as 844, 843. I think if we can get that same type of action today and get closer to 9, that might set us up, but really to get this gamma squeeze going, what we need is we got to get close to 9. Then maybe in after hours, rise above that. And then in pre-market tomorrow, rise above that. We're not that far away, though. We really aren't. I mean, if we go back and look, here, I'll pull up the daily chart real quick at how this thing transpired last time. You know, really, let me see. Here's the June 7th. That's the day. This day before, not a ton. Volume was maybe 16 million. And then we hit 125 million in one day. And we ran from 950 all the way to 12. Shit, that could be today. Who knows? We see some volume. We're already at 7 million in volume. Or this could be, today. And then that's tomorrow. But then look what happened after that. We saw a gap up between after hours and pre-market and then this huge 700 million volume day. I don't know if we're going to get that much volume again, but this is what we need. We can get this in one day. This was a $3 move, a 30% move, but that's going to get these calls on the money, and that's what we really need to get to if we're going to see the gamma squeeze. Is we need to start getting some calls on the money. Right now, if we look at the options chain, you know, 8,000 open interest at the $8 strike versus 13,000 open interest for puts. So, the bulls are underwater on the option chain. We want to get past 850 and put these 11,000 strikes in the money. And then we want to get past 9 and put these 30,000 calls in the money. That's where, if we could do that today or in after hours today, we might be able to see a little repeat of what we saw in June. Maybe, but we got to get there first. We need to see this upward movement in the option chain. The potential exists, but the potential exists to also be pinned at max pain like we've been for the last couple months. So we just got to wait and see how it goes. Let's see. Yesterday, Coach had the red morning. Tarheel had the green afternoon. Let's repeat. Yeah. Sometimes it's good when I finish red, right? I'm just setting it up. I'm like I come in and set Tarheel up for the kill. So anyways, that's it. That's my take today. Thank you guys again. I appreciate everybody coming on. I love doing this. That's why I continue to do it. It's fun. I'm glad to spend the mornings with you guys. As long as you keep coming in here, I'll keep coming on. See you guys. Well, I'll be watching Tar Heel later on, but if you're not in there, I'll see you guys tomorrow morning on here. All right.